Good morning, everybody. Welcome to Budget Day in the UK, but also it is really the midst of earnings season. Yes, they decided one middle-aged white bloke talking about finance wasn't enough, so we got another one in.
Yeah, glowing.
Luke Miller, welcome back.
Thank you for having me back. Must have left an impression. You've invited me back so quickly. It's good to be back.
Absolutely, especially on a morning like this, we needed to pull in a PCM and run through. We have so many numbers to go through, don't we?
It's actually ridiculous. I don't think I remember a day this busy for a long time. I mean, look, the budget's the biggest piece today. What clients have been talking to us about for the last couple of weeks, moving positions around, portfolios, it's the biggest thing that everyone wants to talk about. 12:30 today, can't avoid it. Everyone's going to be watching it. It's the first time that I think we've been watching the budget. Wow. We listened to budgets on the dealing floor for a long time, but this one is going to be fireworks. As Sarah put it on the desk this morning, Reeves ain't here to play games.
No.
Games.
Well, we know that straight away because she did a photo session yesterday. There we go. Is this a warning sign of things to come? Today, Rachel Reeves hangs portrait of communist hero in number 11. So this is Ellen Wilkinson, who was a founding member of the British Communist Party. That's who she's decided to have on the wall instead of, now who was there before? It was the, my mind goes. Yeah, it was.
I don't know.
It was the Chancellor from Tory Chancellor from the mid. Nigel Lawson. That was it. Of course, Margaret Thatcher's Chancellor.
Why don't they put something cool like a Banksy or something, to try and be down with the kids? They got a massive vote in from kind of the youth of the UK, so they're just aligning themselves with that. I just think you miss a trick there to try and modernise with something quite symbolic.
I like that. Why don't we put that to Rachel Reeves? After she's got a pretty quiet day ahead, so
I think she'll have time.
Talking about quiet days,
what have we got coming up?
Coming up today is a fully packed. So Luke's going to stay with us for the first hour. We're going to go through all the numbers. We're going to go through the expectations. For that budget, line by line. What could be announced today. And then Angeline joins us with Aaron Bright. So Aaron's going to be running you through his macro expertise. And then we've got an exciting market measures. And then, luckily, with this hour change, we get to see all the opening bell. Of all sessions as well, don't we?
We get everything at the same
sessions as well, don't we?
We get everything at the same time. UK, Europe, US. That's what they brought in. I mean, it's so much more exciting now at the Open. So you guys are gonna have a lot more to talk
today now as well. In the next 20 minutes is what are the potential today now as well. In the next 20 minutes is today now as well. In the next 20 minutes is to look at today now as well. In the next 20, I'd love to look at today now as well. In the Right, of all the 43 sets of numbers out, Luke, which one would you like to look at?
God, take a pick. Look, I would say Google's the biggest. Alphabet. Yes. That's got to be the biggest. And what's their results they had? It was quite incredible results they had. It was quite incredible, really.
2% up in Tesla. 2% up in Tesla. 22% up in 22% up in 22% up.
So that's another move that's come out. Tesla did exactly 6.5%. So we've got what, 7 expected move. So there was an implied move on higher.
Yeah,
again, another options trades. You're looking at another move that's come out. Tesla did exactly the same.
And Google, a big underperformer.
2 so far. Looking at historical moves.
It's tech land, isn't it?
Big time.
So Google, a big underperformer, ran on the platform. It is Alphabet, but relative to its peers as well. It is Alphabet, but we're going to.
There's 2 lines to trade. A,
looking on the platform, it is Alphabet.
Clarify. There's 2 lines to trade. Shelter in, I believe it's A. I tell you what, one thing probably we can just clarify.
What's the difference, go on?
One of them has.
Okay.
Is the difference? Trade. A and C.
Yeah.
A, you get voting rights. That's what we tend to see.
They move. Okay.
Is the difference?
Not like prefs and ords or anything like that.
That's what we tend to see.
They move.
Worth being aware, but we tend to see like they beat on pretty much it. It's more or less the same.
Yeah. Yes. Prefs and ords or anything like that.
I think what everyone's looking for 184. They were looking for 184. For 184. I think what everyone's looking at is things like YouTube, the premium subscription. So YouTube's revenue was up 12%. Their subscriptions across the Alphabet group was up 8%. I think one here was the cloud revenues. Google's business, you break it down into all of its constituents. Cloud revenue is a massive, $11.3 billion, $0.79 billion.
The net income 26 points versus 22.8 expected. Massive beat.
It's a huge beat.
Yeah,
it's a huge beat, and not to be messed with. So you're right. Like I've got them at a forward PE for this PE for this PE for this forward PE for this forward PE for this PE for this coming year at 19, which does make, so the revenue generating hugely the chart if you can,
for us.
Nice.
And I said, sorry, darling. Numbers were absolutely fantastic. So you see, I managed to get in at 8:30. Was a little bit nervous about that, but it closed all sessions at 181. So we'll see in 24 minutes when that opens yet again.
I was watching the Tasty show last night. On my TV watching it, so watching this all come in, and it was just, you know, you had AMD going off, then you had Google going off, then you had Snap and Reddit, and it was just like everything came at once.
And so shall we? I'll run through a really quick move. Reddit up 28%,
28%,
all-time highs.
All-time highs. Obviously, recently IPO'd. I think this summer or spring. This year, last year.
Yeah.
Again, you know, so they were up. Average revenue per user beat. Their daily active users beat. Their EBITDA beat. I mean, the company's just performing so well.
Are you a Redditor?
I'm not. No, I'm not.
Neither am I.
But I don't know if I've got enough to say. I'm more of a voyeur than a content producer. Away from
heard it here first. But a voyeur on Tasty Trade last night.
A voyeur on Tasty Trade last night, exactly. No, I'm not a Redditor. What would I mean? Are you?
No, I'm not. My girlfriend is. Her and her friends, you know, the younger generation, they love to, you know, send all their memes on there and everything. But yeah, it's never really, you know, I'm too busy preparing for the show. You know, in the evening.
Ever the professional. I think the interesting thing about Reddit, of course, is it's going to be implicitly tied to Wall Street Bets. It always will be. You know, from a marketeer's perspective, I think Reddit, I think Wall Street Bets, I think retail traders, and I think everything that went on with GameStop and everything that came out.
So true.
Did you spot Keith Gill of the original Roaring Kitty fame came out yesterday and said that he'd fully exited his position in Chewy. So Chewy was owned and founded by, I want to say his name is Ryan something, but he actually, Ryan Cohen.
Ryan Cohen.
So Ryan Cohen had stepped into GameStop as CEO and everything that came out of that. So Keith Gill seemingly still gets the headlines because a Bloomberg flash came across my screen saying that he'd fully exited his position in Chewy. But there you go. Where are we going to go next?
Snapchat up 12% after market on numbers.
Interestingly, that one was inside the expected move. I saw that they were expecting a 20% move.
Wow.
It was up. It was initially down. They had to correct the figures. There was an initial misreporting. So they came out...
Again, I swear that's the second time they've done that.
With Snap.
Yeah.
Well,
there might be I might be getting mixed up with somebody else, but...
So they initially came out lower, and then they corrected it to say that they beat on sales, beat on earnings per share. There was an earnings per share of 8 cents versus 5 cents is what they were looking for. And then, yeah, they've moved higher as well. Are you a Snapchatter?
No, not a Snapchatter either. This is the problem. As I said, middle-aged white bloke. I just missed all these. I remember trading it on the IPO. That was fun. I was stuck in a hostel there somewhere as well during my time out of work. But yeah, no Snapchat, no Reddit. I'm just not cool anymore.
I think you're not cool anymore, but I'm not cool anymore.
I like it anymore though. Because that's insinuating that I was at one point. I'll take that. Thanks, Luke.
Take that, but you're also Mr. TikTok now, So
Oh yeah, that's fair.
so you're on TikTok. I'm still refusing to download TikTok. I've got way too addictive a personality. Instagram is enough for me. I can't dare breach into anything else.
People have said you're very meta, so that is Instagram suits you well.
There you go. But you're right. It's not for my generation. It's definitely for the generation below. My wife's goddaughter she's probably 12, 13, and all they use is Snapchat. More so the WhatsApp. She's actually called me a boomer because I was on WhatsApp. Snapchat is the way forward. So we're clearly, you've got to be aware of the trend. So whilst it's not something that you and I are probably going to take part in, it is still a huge market and it's still clearly growing.
And that would have you 12% better off today if you knew that. PayPal down 4% aftermarket. So yeah, PayPal not quite as good as expectations. We had talking about payments as well. Visa beats estimates, only up 1%, but it was the Times this morning like to say that it was signalled a strong economy because their payments were up 8% year on year.
Yeah, and that was a beat as well. So the market was looking for a payment volume figure of 7.5% growth per year. Sorry, 7.5% growth year on year, and it came in at 8%, so that's good. People are still spending money, and that was on volumes of payments, not necessarily the size of payment. It was just the number of transactions.
Yeah, which is another number of interest, isn't it?
Which is another number of interest, yeah. Cross-border volumes, interestingly, 13% on a 12% expectation. So they beat on international cross-border payments as well. They did, however, they are cutting staff. So they're laying off around 1,400 employees. It was a bit turgid. It didn't move. I was watching it kind of live as it was coming through.
Yeah.
Just because we're so markets, we just love it.
24/7.
24/7. But it just didn't move. It was, you saw everyone's attention was over at Google, Snap, Reddit, AMD. We need to talk about, and Visa just got left behind. Didn't do anything.
And that is will be I think the last one that we look at in the US before we move on to European numbers this morning. AMD down 4%.
Yeah, down 4%. So again, that was an inside move. We were looking for an implied move based on the options at 7%. Their earnings per share was in line. They actually beat on revenue, but I think the way the market is looking at these is AMD's got to stand on its own 2 feet against the likes of Broadcom, against the like of Nvidia in the kind of chip space. And if they don't absolutely demolish it, they're going to get killed. It seems a shame because it looks like they beat on most top lines. But yeah, I think they spent more on R&D than the market looked for, which I think might have done that to the stock.
Now, talking about, you had an interesting story for us there in the chip sector, didn't you?
There is, yeah. So some kind of not necessarily reporting style, but there were some big stories yesterday. So OpenAI, we all know OpenAI for ChatGPT changed the game kind of last spring when they came out with their GPT model, and that's just driven all the AI. And for those, did you listen to our podcast this week, Talking Shop?
I haven't heard it yet.
Well, on
Shame.
On our podcast, Talking Shop, small plug, get it on all your major platforms now. We have a section called Margin Call. So at the end of the podcast, we like to kind of see who's taken the L that week, who's dropped the ball, who's got to stop themselves out. We call it Margin Call. And in our research for the piece, found out that Sarah had actually messaged me. We were trying to play around with GPT, and back when no one had a clue what it was. And we ended up getting a summary of the 2016 election night as a rap in Trump's voice, because of course, why would you not do it like that? But at the time, this small stock called Nvidia that neither of us knew and really paid much attention to, $27.
$27.
So, yeah,
and we were done a 10 for 1.
Twice.
So it's now 1,400. Twice?
No, it's done once.
Okay.
So yeah, it's obscene. We could have retired.
Yeah.
We sat here talking to you this morning.
Oh, well. And who would want that?
Anyway, so OpenAI.
Your loss is our gain. And we've got that story there. So look at this headline. That is a big one.
So OpenAI, they need a lot of computing power. And Nvidia's obviously been a huge beneficiary of the rally there. They are going to make their own chips. So they are bringing it onshore, and they're going to be manufacturing with Broadcom and Taiwan Semiconductor. That's massive news. So it's the first time that OpenAI, under its new structure, because of course they've changed from being a not-for-profit into this new, there's an acronym for it that I can't recall at the moment. Yeah. But they need all this huge computing power, and so they are now going to be working alongside Broadcom and TSMC to build them, which is huge. Basically, it's a big announcement. Came out yesterday mid-afternoon.
Right, so let's see the repercussions there throughout the chip sector. Broadcom, unfortunately, not in all sessions. I'm going to try to get us to make it one. Okay, before we move on to Europe, let's have a quick rundown on the futures. S&P, we're looking up 20 basis points. NASDAQ up 30 basis points. Oil trading 67.64. So we are seeing a little bit of a rally in oil there. Gold, all-time highs. Ding, 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 ding.
Again, we haven't got a bell. Have we got a bell yet?
We're going to get one. I'm on Amazon today ordering a bell because
spot gold all-time high. Silver as well? Where's silver? I think they've been trading in lockstep recently.
Hi-O Silver. I've got to add that one to the list there, don't I? But a lot of all-time highs. We're there and thereabouts, aren't we? Bitcoin, we're close. Bitcoin 72,200 this morning.
Yeah, really interesting on Bitcoin actually. We've got Coinbase later on tonight. So Coinbase are the custodian for the IBIT ETF, or one of the custodians. So a lot of flows going into the ETFs is going to really, we expect, benefit Coinbase. So there's some big expectations coming in there. There was a lot of volumes traded yesterday. So crypto's now back towards, as you mentioned, near its all-time highs. Looking at various different of the main exchanges, we noted this morning there's a 70% increase in volumes across all cryptos yesterday relative to its recent history, and a 50% uptick in futures. So for some reason yesterday there was a huge volume day.
Right.
If anyone's got any idea as to why that is, let us know in the comments. But it's something we just observed yesterday.
Now, talking about the comments, whoa, it's all kicking off in there. My apologies, everybody, in the comments section. Didn't see you there. We're so busy going through the US numbers. Good morning to Conrad. Haven't seen you in there before, Conrad, so welcome to the party. Richard Dolby, thank you very much. Captain Rich, I'll take that one.
Captain Rich, nice. Get your little captain's hat.
Angie's looking a bit rough today.
Thank you.
Bit harsh, bit harsh. Morning, Ben, over in New Zealand. Big earnings, everyone's watching this and next week. Yeah, we get the Reddit and Harshit on the morning as good morning to you as well. Morning. And Grey B. Well, a lot of new names there. Welcome to you all. We're going to dive into European earnings now. What have we got? Not so rosy across this side of the pond, is it?
I tell you what, the one thing that I do just want to do before we dive into that is we can't kind of flick on the news without seeing something to do with Elon Musk at the moment. His XAI, in the subject of AI and video and everything, XAI are in talks to raise funds at a $40 billion valuation. I'm not sure there's been an entrepreneur that is as adept at raising money or creating wealth than Elon Musk. I mean, he divides opinion. You love his companies, hate his companies.
But they're lining up to give him money.
I mean, it's incredible.
Yeah.
I mean, SpaceX, Tesla, everything with Starlink. It's quite incredible.
There's just not the equivalent in this country, is there? I mean, you know, Duncan Bannatyne, you're not really, it's not the same kind of,
not quite the same
to it, is it? It's
Dyson,
really
I
tough.
suppose.
Dyson, yes.
Dyson, perhaps.
Yeah.
But again, not in the same leagues. Who else are big kind of
Alan Sugar.
Sugar.
You really struggle, don't you?
Big Mike, perhaps. Mike,
yeah,
actually,
well, that's true.
The retail conglomerate. Yeah, I don't know. It's just something to be aware of. But yes, you're right. Sorry, we need to move on to...
Now, question. What is the greatest steal in corporate history? What is the greatest steal in corporate history? Which company, if you're playing Monopoly and you come along and somebody lands on your Mayfair or whatever, and they have to give you all their properties, they have to give you all their brand, they have to give you everything for hardly anything, and it's backed by the regulator.
What is it?
Take a wild clue. The reported numbers this morning, Swiss bank UBS smashing third quarter expectations with a 1.4 billion profit thanks to those hard-working people at Credit Suisse, which I was a proud one of. There's not any bias in my voice at all, but this really was an incredible deal for UBS, and now we're starting to see all that bear fruit. Okay, net profit of 1.4 billion compared with a forecast of 670 million.
How about that? I mean, that's the definition of an opportunistic trade, isn't it? Buy the dip.
Buy the dip.
Buy the dip. Move everyone. I've not been to. Is it Geneva where the headquarters are?
No, it would be Zurich.
Zurich.
Yeah.
But I read that on either side of the main square, you've got UBS on one side of the square and Credit Suisse on the other side of the square.
That's it. And now they've played Monopoly and they've won.
Yeah.
That's it. Swiss banking is UBS. Congratulations to the team there. And a very right, and then producer Fred is very keen to get on Volkswagen. There's obviously something big happening in Volkswagen.
Okay, let's have a look at Volkswagen.
Here we go. So a horrific profit plunging 42% in third quarter amid a sweeping overhaul.
Car manufacturers can't catch a break at the moment, can they? They cannot catch a break. So that's Mercedes-Benz, that's Volkswagen. We've got Aston Martin here in the UK. Not quite the same company, but they've missed their earnings. Their EBITDA has missed. Volumes are lower than expected. Car manufacturers cannot catch a break. What do you put it down to?
Well, of course they're having to spend so much on the capex to research their move into electric vehicles, which Ford has had to step back from, Volkswagen has stepped back from. But when your focus is on that, then your original business tends to slip away. Now, also today,
you've got to keep your garden watered. You have to keep your garden watered. No matter which way you want to go, you have to keep your garden watered, and so you can't take the ball. Can't take your eye off the ball.
Very good. Now, we've also got another story there, which we've got to watch for potential headlines on, is the EU's pushing ahead with tariffs of up to 45% on Chinese electric vehicles, escalating the trade war. Now, that comes into force today. What are the Chinese going to do in retaliation? That's something these German autos in particular have to be worried about as well.
Yeah, I get a feeling we're going to start talking about tariffs a lot more over the next couple of weeks.
Oh, yeah.
With the way the money markets and the prediction markets are looking, Trump's going to be running away with the election, it would seem. And yeah, all he wants to talk about is tariffs. So no, the Chinese will no doubt drop costs. They'll no doubt kind of just try and flood the market, and it'll make things even harder for the Renaults, the Volkswagens, the BMWs. It'll just it'll be a rerun of what happened in 2017.
Yeah, and if you had to invest in one of them, you wouldn't know where to go, would you? It wouldn't, no. Personally, it wouldn't be Aston Martin.
It wouldn't be Aston Martin. As I said, they've missed again. It's going to be interesting. Did you hear Trump on the Rogan podcast, the Joe Rogan podcast?
No, I haven't.
I've been listening to it.
Yeah.
And he has a section on tariffs and was telling a story about how the Chinese were trying to build a factory in Mexico to then sell cars into the States. And just the threat of Trump getting in, supposedly they're now not going to go and build that factory, according to him. So take it with a pinch of salt. But,
yeah.
It's
anything on that podcast, I think I'd take with a pinch of salt, wouldn't you?
Yeah, I would do. It's quite an entertaining listen, though.
Quick look at Asia overnight, just before we move on to the UK stocks. Hang Seng down 1.7%. The local domestic Chinese index down 1.3%, and the Topex also down 0.8%. The reason I'm bringing this up is it runs us right into Standard Chartered, which have come out with nice results.
Standard Chartered have come out with nice results. They were mooted that we weren't going to see them. So in light of the everything that's happened over the last couple of days with the motor finance, they were tempted to not release their results this morning. I saw it when I was doing the prep for this. They were saying they weren't going to do it, but they have. Their pre-tax profits have come in as a beat, $1.72 billion worth of pre-tax profit versus the estimation of 1.5.
So lifting guidance on the net income, was that right? I think they lifted guidance there.
That pretty much rounds off a very successful round of banking results.
really.
Lloyd's were the only ones that really fell out of bed, and that wasn't necessarily something kind of structurally wrong with the business. Of course, it was the motor finance ruling that came through at pretty much the same time. But Barclays, NatWest, HSBC with the restructure, that's all come through. So
I did want to check if HSBC was upgraded anywhere this morning. No. Right. Well, that's a good chance for us to run through the upgrades and downgrades. Excuse me, because there are a few. EasyJet rated new buy at Jefferies, £6.80 price target.
incredible.
Whoa, that's at least 25% upside there off the top of my head.
I wonder what that is. Do you think that's hedged jet fuel with the price of oil coming down a bit?
I think that's got to be really my sister about to fly off to Spain.
Again and again and again.
Inverness Inverness to Magaluf. No, my sister is 55 years old. She's not off to Magaluf. But yeah, family holiday there. Wishing you all the best, Shirley. Now, IAG rated a new buy at Jefferies as well, a price target of £2.70. So that's going to help my IAG position there.
They've also got Wizz Air. So clearly Jefferies have been looking at that sector because they've also upgraded Wizz Air to a £10.20 price target. That's a new coverage. Sorry, that's not. I've given you the wrong thing. They've been rated a new underperform at Jefferies, excuse me. So they prefer EasyJet and they prefer IAG and they're underweight Wizz Air.
And so this is looking like a new analyst taking over at Jefferies on the airlines. We'll find out who that is for you. They've gone a hold on Lufties and a hold on Ryanair. So yeah, so they like British Airways and EasyJet, which we've got IAG in the portfolio there. I think I cut the EasyJet yesterday.
I've just checked, and that analyst consensus will filter into the platform. It's not on there just yet, but that's under the tip ranks tab on the ticket. If you pull up an EasyJet ticket and you can look at tip ranks and look at the analyst consensus, you'll be able to see all that data in there for those that are asking.
Right, 3 minutes before the market opens. So we've got GSK and Next still to look at.
It just keeps going.
Which one do you want to go first?
It's just someday. Let's do Next.
Next.
They have boosted their pre-tax profits. So their full price sales came in at up 5% year on year versus the market looking for 4%. Their full price sales have come in at 7.6. Discounted sales is up 3%. Again, these guys just continue to keep making plenty of dough.
Is it Simon Wilson still? They manage guidance so well that the amount of time that they can come out and upgrade their full year profit guidance is incredible. What a company.
Yeah, quite incredible. They've said that the performance was driven by the early arrival of colder weather this year versus an unusually warm September and an early October compared to last year. So nice jumpers and coats from Next. Clearly not me though, because I'm part of the Ralph Lauren Club. But the weekly ad.
You thought you had to be in the Ralph Lauren Club to come on to the show, didn't you?
I did.
Unfortunately, I missed that one this morning. I was thinking about wearing red, but I didn't want to spook the budget. I didn't want to just because I'm feeling pretty optimistic about the UK today. Famous last words. They're going to show that on the playback when the FTSE's down 5%.
Yeah. Incredible. Actually, one kind of headline to be aware of, just on the open. There's been a reported fire at a...
That's scary, isn't it?
Yeah, there's been a reported fire up at a submarine site up in Barrow in Furness.
A nuclear submarine site.
Nuclear submarine site. The police have said that there's no nuclear risk, but watch BAE Systems. They're the private company that run that particular area. So 2 people have been taken to hospital due to suspected smoke inhalation. We wish them, of course, all the best, but that is going to be something to watch just on the open. What we haven't mentioned.
There it is. GSK cuts 2024 vaccine sales forecast for second time this year. I have been ill for the past week. It's probably been COVID, so don't worry. Look, but I haven't gone and got my vaccine, so that's bad of me. Their weak demand for its respiratory, how do I say that? Syncytial virus and shingles vaccines. So it keeps its full year total sales and earnings forecast unchanged, however. The strong growth in specialty medicines helped to offset those lower vaccine sales.
Yep, good for them. I think the other one, just to beat, and we are taking this right up to the opening bell. So
we are. We're on a countdown. Go on.
Break. Glencore. Glencore have put their production report out as well, so they've maintained their forecasts. Nickel production came in bang in line with their expectations. Cobalt production came in at the bottom end of their expectations. Zinc production bang in line with their expectations. So they are.
We're counting you down into the opening bell. 3, 2, 1. Where was the bell, producer Fred? Right, we're ordering that bell. Here we go. We are off on the busiest day of the year. FTSE week yesterday. What's those gilt prices? Okay, gilts yesterday just continued that poor move, and the FTSE getting trumped again. Down 50 basis points, I think. Have we got the FTSE at this moment?
The FTSE down, 0.5%, 45 basis points at the moment, 81.81. That's going to be there. Looking at your stocks there, Glencore flying so far on the open. What's that, up 2.5%?
So yeah, Glencore, those production rolls, good from Glencore. However, looking at Anglo-American down 2, GSK on numbers down 2% as well.
Interesting that you've got, with Glencore obviously flying, with then Anglos doing poorly. You'd expect in the same kind of mining sector that there to be a bit of read across, but clearly not on that side.
Rio's down 1.5, Lloyd's down 1.5. This is just a continuation from yesterday, isn't it? That real weakness. I did a TikTok on it last night. If you're looking at our live with IG TikTok, the moving gilts, there's just fear. And I don't know if it's fear because of the capital gains tax going up. Are people just getting out before that increase today? Or is it a fear about a Liz Truss style panic in the gilt market?
I think one to keep an eye on. We'll clearly have to keep an eye on it. Wizz Air also down on that underweight rating from Jefferies, perhaps. But Next, loving it.
Yeah.
Their positive numbers. What's going on in Europe there?
Yeah, so we got Adidas. Not too many winners in Europe either. Adidas just managed to keep its head above water. ASML still around that 660 level. You know, nothing special there.
So there was news on Adidas yesterday. I don't know if you saw it. So they've been long battling to ditch all of their Yeezy line, their Kanye West affiliated line. They had a new pair. No, I actually got rid of a pair recently. I haven't worn them in a long time. I had a pair over COVID, the trainers, but I haven't worn them in a long time. When the new CEO came in trying to tidy everything up, they said that they've got something like $100 million worth of this stock that they were trying to distance themselves because of Kanye's kind of anti-Semitic rants that he was going on there to get rid of all of the stock, and they unplugged from that. But in line with that, they said that they were going to donate anything that they sold, they were going to donate to charity. So there was a huge kind of overhang. They wanted to get rid of this stock as quickly as possible, but they also said that they didn't want to profit from it themselves. They wanted to make sure they could cover costs, and they wanted to donate it all to charity. They settled the claims that Kanye then brought against them yesterday. So
that's all done now, is it?
That's all done and dusted now.
Right.
The company can now move on, and so perhaps we're seeing a bit of a kind of moving on from that.
Now,
a set of candlesticks.
Aston Martin, it tried to open higher. It tried to open up 3%, but you can see that it's been knocked back straight away. So we'll keep an eye on that one. Aston Martin, around, but the numbers are being taken well up. In the mid price, it's up about 3% there. So yeah, let's keep an eye on that one.
Yeah, I make that 4.2%. Trading with a 2% spread, 2p spread, which on a £1 stock is quite expensive.
Now, where's my standard chartered? Up 2.7% there. Let's have a look at that one on a slightly longer time period. Wow. Wow, that's nice, isn't it? So it's similar to HSBC, actually.
Similar trends. That's the same trend that you're going to see bar Lloyd's. You'll see the same trend line on Barclays. You'll see the same trend line on NatWest.
I'm just seeing how far we go back on Standard Chartered to see when it's been up here before, and it's 2015.
Yeah, but are we all-time high?
Look at that.
Quite.
That's really interesting, isn't it? And that's the hidden names in the FTSE. The FTSE just has really struggled to produce any, and dare I say that on 13 times earnings, it's at such a substantial discount to the US at 22 times, 23 times earnings, depending on what earnings number you use. There are little gems like this. There's little gems like Marks and Spencer's, Rolls-Royce that we've seen in the past year. What are the gems? Are the gems of tomorrow?
Yeah, I mean, general as well. I've got a couple of clients that will use their spread betting account to buy and hold assets that yield more than it costs to finance the spread bets.
Okay.
So you're getting a tax-free carry on the interest. So I've got Legal & General here yielding 9% at the moment. The net for the net kind of funding rate for a retail client at the moment, given the UK rates of 5%, you pay IG3, that's a net of 8% annually on our daily funded bets and on our cash CFDs. You buy Legal & General, you're going to get paid 1.3% on top of that financing. So you're buying a company for its growth and having it finance it for you. So there's some really interesting picks in here.
And there's the daily chart over the past 2 years for legals. Ooh, I don't think Angeline would like that one though. Axel would be questioning this this move here. Have they had numbers yet? Don't think they have.
I don't think they have yet. No.
So right, that's clearly one to watch, because anything with the Asian exposure, such as HSBC and Standard Chartered doing well, legals, let's see how they get through the budget today, first of all. Right, how's HSBC doing after yesterday? I got stopped out on this. I bought it on the open yesterday at 7.07, watched it go up to 7.25. Angeline told me to get out, and I was stubborn, and I set a 7.14 stop, and I got stopped out going into the close yesterday, just because the FTSE is so weak. You know what I'm going to do? I'm going to go back in.
You can have another nibble.
I'm going to go back in because I'm feeling optimistic today, and that optimism clearly has no place with a communist on the wall of Rachel Reeves' office.
I know. We were talking just off air. The Chancellor, well, you said they're not allowed to do it anymore, but I always thought the Chancellor was allowed to have a drink whilst they're delivering the budget. It's not been done for a long while.
They might still be allowed to. It's whether they decide to or not.
Yes, they haven't done it for a very, very long time. But go on then. What do you think?
It'd be punchy, wouldn't it?
What would a drink of choice be? Do you think?
Oh, it's got to be a gin and tonic. With the way that she's going to be delivering, the numbers today. In about 10 minutes' time, we're going to go through every single measure that Rachel Reeves may put into your pocket today or take it out. Let us know in the comments. What's she doing? Is she going to give to you? Are you on minimum wage? Are you going to see your minimum wage go up 7%? Or are you sitting there as a non-dom with a second property, kicking back and enjoying your breakfast watching the show?
Well, minimum wage was already raised. Did you see that yesterday?
That what, sorry?
Minimum wage was already raised yesterday. So there was an FT article, producer Fred, I don't know if you can pull it up on the Financial Times homepage. The UK minimum wage is set to rise to £12.21, which is an increase just...
so they've pre-announced it.
Got it, UK minimum wage, there you go, that's the one.
There we go.
They've pre kind of guided the markets, as you were, similar to Next. There's an increase of 6.7% in the adult rate from next April, and that's going to come alongside an 18% jump for workers aged 16 to 17.
This is a problem, though, because this is more than I get paid for being in here. So who do I speak to about that, Luke?
Let's...
The clients not count?
The clients not count? Yeah, of course. I keep forgetting that you're a client.
If only I knew the head of HR.
Oh, yeah.
Then, the fact that I'm teaching her to trade in here every Monday morning.
Yeah, exactly. Definitely the one to talk to.
Let's not forget, we've got the all sessions open.
Yeah,
so,
right.
How is that Google doing? It's the biggest riser. Only 179. Not quite reaching the heady heights it was last night at 181, but we'll see how that continues.
What else have we got on there that's going to be all sessions?
Oh, AMD's getting cuffed.
Well, AMD post earnings, don't forget, and it's really coming on.
There.
Is that a continuation? If you pull up a chart, is that last night plus this morning?
I think I thought it was only down 4%. So unless it was up a lot yesterday,
it's not a huge move post yesterday.
Yeah, it settled around 153.70, and it's so down 1% additional.
Yeah, I think there's going to be a mixture of both results and there's going to be some of that OpenAI news into AMD, some of that OpenAI palling up with Broadcom.
Of course.
I think they'll look soft today.
Now, do any of you have Reddit and Snap? Who's the clever ones this morning? Let us know in the chat. Reddit or Snap? That's the kind of stock Ben Buswell would have in New Zealand there. I know it is. Come on, tell me you've got some. Also, Rory up in Edinburgh. I know that's the kind of stock that you would have there. Let's see. Meta up 2.5.
Meta reporting tonight.
Yeah, that's
of course. They've got Meta and Microsoft are the big boys this evening, so one to keep an eye on and see how they trade throughout the day. And Coinbase, as we already mentioned, but that we'll talk on more later in the show. Interestingly, the GameStop is up there 5%. As I mentioned, Keith Gill earlier has come out of his Chewy position. I wonder whether there's some Wall Street bets saying that he's going to refocus on GameStop. I tell you,
it could well be.
I tell you one thing. Did you see there was a film made out of the GameStop move?
Remind me the name of it.
It was called. I think it was called Dumb Money.
Dumb Money. Yeah, that's it. Which is also a podcast. And my good friends that I had onto the internship in a day. So Dumb Money. I actually am on Dumb Money.
Oh yeah, on the podcast.
On the podcast. Yeah, you can find that on YouTube. No, you
plug.
You had a plug there.
So you got to get one in as well. Surprisingly, a really good film, I thought. So having lived it, having broke through it, because of course this was time when we were all working from home, having traded it before it was an all-session share on our platform, we were taking tons of phone brokering on the stock. It was one of those things you just could not avoid. Everybody wanted to trade it.
It must have been frantic, was it?
It was fun. It was frantic. But it was fascinating watching the film back from the other perspective. And then I was watching it with a friend of mine and my wife, and we were sitting there almost reliving it, which was quite a weirdly cathartic experience. But definitely a good film.
I get that from The Big Short as well, though, and even this latest series of Industry, when they're going through and they so don't want to spoil the storyline. Industry Series 3, it's very good, and it's very similar to I don't know. I'm gonna spoil it.
Don't spoil it.
I can't spoil it. No, it's too good.
I've watched it all, but tell me off.
But yeah, very similar to a certain year back in the financial crisis.
Who's your favourite character in Industry?
Not Eric.
No,
because he reminds me too much of an old boss. I won't say which one. Morning, Danny.
Is it Rav the trader? Raj?
Oh, Raj, yeah.
Raj. Yeah. It's the best thing. There's a YouTube compilation of all of the comments that he's shouting in the background of people that are in a scene, because the working from home life now makes our trading floor a little bit quieter than it probably has been historically. But it reminds me of pre-COVID when there'd be people shouting and everything going on, and it
was great. It's the algorithms and AI just threatened to kill that, but the 20 to 30 minute period on a trading floor when there's just been big numbers, big economic figures, there is no adrenaline high like it in life.
Well, like this afternoon, are you going to be on the dealing floor this afternoon?
I am. I'm gonna sit there ready to go. Speaking of which, let's take a look at exactly the predictions for today. What could Rachel Reeves announce? Look at that, wonderful. Does that scare you or does that give you confidence?
It's Halloween tomorrow.
Wow, that's a big call.
It's Halloween tomorrow. I don't want to say, I don't want to say they picked the date, but also supposedly it's the longest time between getting a new government and the budget. It's
interesting.
One of the longest periods of time that they've not brought a budget to the floor. Something like 2 or 3 months, I want to say, maybe a little bit less than that. But supposedly it's one of the longest times.
Companies talking about this being the perfect storm for UK business, right? Now, that's because there's a potential for her to increase employers' national insurance by between 1 and 2 points, right? So that hits employers. There is a chance of freezing income tax thresholds, which will definitely go through. So that is a stealth stealing of your inflation-affected spending.
Yeah, so just to explain what that means then, as employers hopefully give us all inflation-linked pay rises, you move up through tax brackets. and through bands. So if you are fortunate enough to get one of those pay rises and you pushes you into a higher band, because those bands are not moving on an inflation-linked basis as well, you end up paying more tax.
And especially if you go through that 100,000, that between 100,000 and 112, I think it's a net 60% marginal tax. So let's see if that gets fixed today. Capital gains tax, this is the one that, of course, everybody should be scared about at home on that spread betting. You've got 20% rate at present. That could go up to 25, or is it going to go higher?
Yeah, that's the one that clients are talking to us about all the time. All the time.
It's the big one, isn't it?
It's the big one, yeah, because we're fortunate enough that our product is considered tax-free for a UK investor on the spread bet side.
The majority of.
And it's one of those things where we're finding, conversations with clients these days are much more, they're driven a lot more by education around what the product does. Spread betting will lend itself to a kind of sporting and a gambling moniker just by the name of it being called betting. However, if you had an investment, let's say you've got, 20 grand's worth of Lloyd shares or 10 grand, 5 grand, whatever it might be, the platform will let you build a spread bet and you can define it in notional terms that it'll be exactly the same as if you bought 5,000, 10,000 shares of the underlying. Therefore, what you would, to borrow an options term, the rate of change of the price of the stock, you're going to be making or losing exactly the same amount of money with a bet on our platform versus owning the asset. So I've probably had 2 or 3 people in the last couple of weeks moving positions into us to try and avoid that. So it's interesting.
Fingers crossed that gets through today unhurt. What's not is going to be inheritance tax. Looks like it's going to be a potential move on inheritance tax as well. There's going to be VAT on private schools. Non-DOMs, this is one that I actually support strongly, is close those loopholes on the non-DOMs. Right, now that is together with, I think a lot of people in that bracket say, right, if you're going to do that to us, then stop fraud in welfare as well, which are both 2 moves that will be taken very well, I think, by the general population. Fiscal rules, we're seeing more long-term infrastructure projects. The NHS, we're looking to help, help for everybody on the NHS waiting lists. Wes Streeting has played down that a little bit so far. Housing, and then there it is on benefits. Yes, benefits, Reeves has warned of difficult decisions. So that is what to expect on the budget today. Those are the big ones to watch. Will there be any surprises? Let's hope not.
12:30.
12:30.
12:30.
Eyes peeled. Watch those gilts. Have your gilts on screen, have GBP on screen, and of course the FTSE. We're going to go to a very quick break. We'll come back and answer your questions, including the ones on the YouTube comments.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Welcome back, everybody, to Confirm and Send. So this is where we take your questions from home and we try our best to answer them, whether it's on the IG platform, whether it's on markets, whether it's on today's budget. Get your questions in there in the YouTube, which we've had, we've got lots of comments in there today. What's the budget going to do to the markets, Harshit says? Well, not sure what it's going to do to markets, but there are a couple of trades out there that I have put on just to have a bit of optionality there.
Okay.
And now they won't look great so far, I'm sure, but I thought that vol was especially low. We looked at this yesterday with Elliot Harris. Vol on today's sterling move, right? So sterling currently 1.302. So yesterday I managed to get a 130.5 call on for expiry on Friday. And it's still actually not that expensive. So if you go onto your platform and scroll down to FX, there we see GBP US dollar. Now it could be euro as well, GBP euro, sorry, but GBP dollar is going to be the one today. On the daily, now considering we're already at 130.20, they're only expecting a
20-point move.
I mean, this is, if we add them together, okay, 40, about 44 points, that's still only 30 basis points.
Seems so cheap, doesn't it? Especially given cables come off from 134 a month ago.
And there's so much concern around this budget.
Yeah.
So I have to have another, or actually maybe we could go out to the wings and do a sort of cheaper option. Yeah, there we go, 130.50. Well, let's double up on that. Size, I'll put £10 a point on there. So that's, $119 of premium to just have something in there for a big move.
Yeah, for a pop, nice. It's, it does seem quite. I mean, it does seem quite quiet. The FTSE 100 has been soft all week. Continuing on from last week. But I think that's more to do with its constituents necessarily than the kind of macro surrounding the country.
It's a market of stocks.
It is a market of stocks, exactly. Although interestingly, what's the 250 doing?
Well, we'll move on to that in 1 second. Let's just have a look while we've got the options up there. What about combining multiple trading strategies of being long options of the FTSE 100 as well?
Well, there you go. Yeah, nicely segued.
Now, to get a 50-point move in the FTSE today, you've only got to spend 5 points. What is going on there? Or on the downside, if you're really worried about this budget, then 81.40 puts, if we want to just get the options up there, please, guys, you can get 81.40 puts, which is only a move down of another 50 basis points, you can get them for 6 ticks, which is, it's,
again,
I
it's
mean,
so
that
cheap.
is nothing, right?
Yeah, I mean, on those prices, it's probably worth having some long kind of expansionary vol plays at those cheap prices.
Yeah.
They are
You know,
dailies though, so you kind of
that's just dailies. It expires at 4:30 tonight, but that gives us 2.5 hours after. But I personally would prefer to play it that way than I would through futures, because volatility over the budget, you just don't know what could happen. So those futures positions might be a bit more risky. And what do we like to do in this program? Reduce the risk and keep your potential reward the same.
correct.
So on that, I'm going to, I want to believe in today. I want to believe that it's going to be a good, rewarding, make Britain great again.
It does feel like we are fairly depressed about the whole thing, doesn't it?
Yeah.
You know, you read the newspapers. We led with the fact that she's got the communist painting on her wall now, and that's kind of what we opened with. It just feels like we are setting ourselves up for a bad day. Some of the guys came in this morning, and it was almost like you've just had a set of bad results. Just like, get it over with. You know, we have to wait till lunchtime.
So yeah. So what's the phrase I'm looking for? It's in this case, sell the rumor, buy the fact.
By the truth. We'll see how that goes.
Dare I throw it out there that perhaps there are people being a little bit sexist for the first female chancellor in history in the UK? Does that come into it somewhat?
I'm going to be fairly optimistic and hope that humanity doesn't do that to people. But I do think there's been a very concerted effort of dropping things into the media to see how they're going to settle. You know, we've gone from bringing CGT up to the same as income tax, up to 40% for certain people. I've seen inheritance tax figures being bounded around. You see all these fear-mongering style stories. They have been laid out there, and these things don't just leak. They're being placed into the media to see how they land, to test the waters. They may have even been trying to talk down on purpose.
Get the expectations,
So low.
Yeah.
You know, get everything out the front door. It's similar to your man at Starbucks, who the new CEO that came in.
Brian, yeah.
Brian came in,
yeah.
and their results last week were just like, get everything out. Get all of the crap out. You know, I'm not part of the team that had all these bad numbers, that had all of this horrible work. Let's get it all out into the markets, reprice it, and then we can move on. So I wonder whether that's what you're going to see.
And he moves on today. That's one to watch. Starbucks, they of course had that profit warning, but today he's got his strategy call.
This is it. They've got what? They bought themselves a week?
Yeah. Yeah, so that one's going to be interesting. Now, what about combining multiple trading strategies on that platform, Luke Moore?
Yeah, the way I'm going to think about this is I'm going to lean on our good friends over at Tasty. Did you go to the Tom Sosnoff event, the one that we did at the O2 at the start of the year?
I wasn't at the O2 because I had to go home and visit my mother, but I'm going to have the pleasure of being there all 5 days on the tour with him, on stage. I'm going to be his trading animal.
You're going to be there all week.
50 trading monkey, exactly, yes. 50 days in 50 trades in 50 minutes.
50 trades in 50 minutes.
And he's going to shout them out, and I'm going to have to plug them in.
Nice. Well, that was a nice little plug, but my point wasn't to kind of set you up for that, but nice that we're going to have you on tour. So for those that want to come in, I'm going to be in Edinburgh alongside Rich and Tom, of course, and some of my colleagues will be joining each the Tuesday, Wednesday, Thursday, and the Friday event. But at the event that they did in the O2, it was all about how to build a portfolio, and it was about allocating capital through different risk buckets as part of your overall fund.
Nice.
So they were talking about having a portion of your assets unlevered and in physical assets, and you probably have a market tracker, an S&P tracker, a FTSE tracker, one of the Vanguard funds, an iShares fund, something like that.
Yeah.
And that can quite nicely sit within an ISA, or potentially even with your pension, your SIP. There's no excuse not to perform in line with the market.
So if we're talking about a football field, that's your 5-man defence, isn't it?
It's your minimum expectations.
Yeah.
Yeah, because I suppose what you've got to ask, and I can ask it to you, when you're planning a trade, when you're planning your year, how do you know whether you've had a successful year or not? Do you benchmark yourself against something like the S&P? Have I been better than market or worse than market? Has it just been a good fun? Have I actually performed well? Have I made money, made losses? I mean, what do you do?
It's I don't like to do that because that would make me feel bad.
Right.
And I prefer to think I've had a good year, even though I've underperformed the NASDAQ most times, because I cannot. The last year I've not been able to buy the NASDAQ, and it's been wrong.
Yeah.
Okay.
Well, like most people, right? Terry Smith, the biggest fund manager, one of the most famous fund managers in the UK, has underperformed for the past 3 years because he just cannot get his head around following the trade. He wants to buy higher quality companies. But with that, then you have, you should be having a conversation to say, actually, am I better or worse than the market? And if you are underperforming, do you then feed capital into your underperforming pot, or do you give it capital?
See, so the way I think about it is my aim is interest rates plus 10%. So I want my return to be around about 15%, because that's worthwhile me putting all my time into it. Otherwise, I may as well stick it in, in a savings account and take the 5% or treasuries. So generally, I will return about 15% every year.
Yeah.
Did it through 2008, 2009, 2010.
Yeah.
And that's my sort of, a bad year is flat. I've never had a down year.
Well, good stuff. So, and do you, as a full-time trader, do you have your kind of run rate that you need to get in order to kind of meet your day-to-day costs? And then that's going to be the first 3, 4, 5, 6 days of the year, of the month, to cover your costs. And then everything else is the fun kind of let's play and trade.
Interesting. Yeah, I haven't thought of it like that.
Because it's like a job. If you're trading full time, it is like a job. And this is where the kind of asset allocation thing comes into. You've got the long-term capital that is the market, and you can be levered or unlevered. Then you have the directional plays, because you want to be long, short. You want to take a view across things like today's budget. And then what they were pitching for in this Tasty event was having some form of volatility strategy. And that's where the interesting part is. Yeah. So I would answer this question first by looking at it as an allocation. So how much do you put towards certain things in your portfolio? The second way you could ask this question is backing up different physical trading strategies. So are you a mean reversion trader? Are you a trend follower? And I'll give you a quick story. A client of mine who I've known for a long time, all the way through COVID, was a trend follower. That's what he wanted to do. That's the way he found that it worked. He kind of did years and years worth of back testing. Trend following was working for him on the DAX. Now, for him to be in the trade all the time, he put what he called a pilot trade, right? There'd be a £1 a point. There'd be a tiny trade with a stop on it, because he wants to control his risk. If the trend started to kick in with his pilot trade, he would then add to the trend and then move the stop loss up on the net position, and it would continue to continue to kind of level up. And of course, as the expectation is, you move higher, you move your stop higher. The problem was, he said it was like mental warfare, because he was getting stopped out in 90% of the positions because the trend wasn't kicking in. So he was constantly having to log back onto his account, place the trade, do it. He knew through his modeling that his strategy was going to make him money.
Yeah.
But he was just like, I cannot continue to keep putting these trades on because I keep getting stopped out.
Yeah.
And he said it was just so difficult. So he's now moved, and he has got more of a kind of a mean reversion type of strategy, where he's kind of waiting for things to range up, and then he'll try and pull them back into the mean. So you can do all these different things.
There are multiple, and we could speak all day about it, couldn't we? But we do have to go on to question 2. So let's go on to question 2, please, team. What is the risk-reward ratio? Why is it important? Choose a stock, Luke Moore, and let's talk about the risk-reward ratio.
Go for, what have we spoken about this morning? Let's talk about Google. Go on, let's talk about Google.
Let's get alphabet up there. Right.
So anyone that's spoken to me or any of the clients that I look after, I'm a big proponent on this exact topic. Risk management is by far the biggest thing that separates people that can be profitable consistently and people that are just not consistently profitable. I think it is. And I've learned this from people like Axel and guys that work here.
Absolutely.
You can control where you are. In fact, let me start in a different way. Whenever you place a trade, you're coming up with a thesis, okay? That's the idea, is I think that this is going to happen. The problem is the market doesn't care.
No.
The market doesn't care who you are, whether you're awake, asleep, whether you've got money in your account, whether you don't, whether you're driving, dropping the kids off. The market doesn't care. So you have to control where it is that you get off that ride, okay? And it should be less about, I've just made a loss, and more about I've concertedly made an effort to
Pat yourself on the back. I've been disciplined.
Yeah.
I've done the necessary things
Yeah.
that I know is going to make me money over the medium term. You know, I've not tried to hit it out the park on this one, but being disciplined and having that strategy, that's the real way to make money over the medium term.
You have to. and I've seen people run positions overnight, and there's been a headline out of China or something, and then all of a sudden the market's, you know, dumped on your long position or absolutely roofed in your face on a short position. By not having that decision at the start, it just changes everything. From a psychological perspective, it changed my life with my trades. I can be conscious to say, this is my idea. I'm wrong at this price. Fine.
Right. So what is our risk reward ratio going to be on Alphabet then?
Let's say we want.
So I have no stop and no limit on at this moment. So this is the perfect situation for you to guide me on what those should be. So there is the stop in the position. We're in at 178.36, currently 181.
So I would say, what would be your, when you put a trade on, how much are you prepared to put at risk every trade? When you're making your plan, and you've got your portfolio, and you're allocating cash to positions, are you looking to allocate 1%, 2%? What kind of things are you looking to allocate?
In monetary terms, my pain point's around about £300.
£300.
Yeah.
Okay.
After that, I start to think, McDonald, you idiot.
So 125 shares, similar $1.25 per point. Yeah.
Yeah.
Let's.
We're probably about 174 there, aren't we?
Yeah.
So $4 times 125.
Yeah.
Back into GBP.
So that's there.
Okay.
And then therefore, any kind of trading textbook you read, you want to be taking on 1 unit of risk. You want to be paying yourself at least 2 or 3 times that unit of risk, right?
Okay.
And the idea is there was a study done, and I don't know the name of it, nor I don't know when it was done, but it was a stock selection experiment they did with a monkey. Okay.
Oh, right.
The monkey was given very strict risk reward, very strict 3-to-1 risk reward, but the stock selection was up to the monkey, you know, and they would have a mat with tickers on, and the monkey would splat a stock, and they would buy it, and they would splat a stock, and they would sell it. Funnily enough, I also saw.
Producer Fred, no, that is not how Angeline decides on her trades. That's a terrible thing to say.
I also was scrolling through Instagram the other day, and someone's doing a very similar experiment with a chicken. So you know, you pick a stock, buy, sell, then it picks its risk reward, and by having that risk reward, the monkey was actually able to make a profit. I don't think he was outperforming, but he certainly made a profit on his trades, because if you had 50-50 risk reward, okay, you risked 300 to make 300, you should mathematically be able to flip a coin over a certain number of times, and that strategy you would expect to come out flat.
Yep, zero.
Okay?
Yep.
Zero. So why would you target, we're putting $300 worth of P&L on here, why would you take a $300 profit? It fundamentally doesn't make sense.
Right, so we're looking for an $8 profit. Yeah, we've done a $4 stop.
So therefore you would look for
So we're going to get an $8 profit. So that is 186.50. Yep. 186.50. So there, if we put that in, we should now see, hopefully, on our Google chart, there we go. So the risk down there, 174, there is our risk. There's our stop.
Now, the interesting thing on our charts is if you click on your position, just tap on the P&L, where it's got the P&L there on the left-hand side.
Yep. On the left-hand side,
left-hand side, yep. Now, if you click on it.
Ooh.
Now.
Oh, look at that.
There you go. So, because you've now got a stop and a limit on your trade, we are giving you, your maths was just off, look, 1.1, 1.9. But we are telling you what your risk reward is. And that's so key, because if you're designing a trade and you're using the deal ticket to put a trade on before it's placed, so you're planning where your stop and limit is going to go, you can have the this risk reward will light up. And so before the execution, you can say, right, with a technical analysis background, I want my stop to be here, my limit's going to be there for, it's going to be here.
Brilliant. I could get addicted to this. That's not an advert for
trading
too much.
No, it is an advert for trading with stops. definitely.
Yeah, trading
because
with stops.
you have to be honest. You know, the market. You could be the smartest person in the room, yet someone comes out with a comment. You know, there's an oil headline or whatever, and you're not in control of these things.
That's it. And yet again, I go back to the way I explain it to my students, right? If I'm only right 50% of the time, if I get 50% wrong, 50% right, like the monkey did, if I can lose less on the ones I get wrong and cut them early, but make more on the upside, then that's a profitable strategy.
Yeah. Yeah.
So, you know, then you start to get into the terms, okay, maybe my timing helps me, so I'm right 55% of the time. And then you start to get those outperformances, 15% performance in a year.
But then this then ties into the first part of the question, okay? If you've got your core portfolio long assets, and then you're doing this on the side, the odds are that you're going to be more consistent. And actually, even if you're underperforming your trading pot, you would hope that you perform at least in line with the market. And that's where you start to think about the overall picture of, I am an investor allocating my portfolio to the market. How am I best going to make money out of this consistently?
Yeah.
And that's where it comes down to.
And not have those
aggressive P&L swings.
Yeah. Oh.
Yeah.
Now, Monkey Man has pointed out, stop using my name in your trading examples. Eh? If we gave money to Monkey Man, what's your return? Come on. Are you better than 50-50 of the actual monkey? With that, it's time to invite Angeline back into the building. Luke Moore, you've been an absolute star. Thank you very much. First of all, now, you know Esar, don't you?
Yes, I do. Yep.
Yeah.
Yep.
He's got this great take that we've looked at the trading strategies. He's looking at the psychological side of human behavior in markets. So first of all, I'm going to stick around a bit and I'm going to interview Esar on more ideas because he was a poker player.
Okay.
A very good poker player.
Nice. A lot of our clients are actually. A lot of our clients are poker players. We've toyed with the idea of doing a poker event once or twice, but we haven't yet got it off the ground. I tell you the one thing that we can probably add to this, and I know that you're trying to boot me out of the studio, is if you're setting your stops before you put the position on, your stop distance multiplied by how much you're willing to allocate to your positions gives you your position sizing. And so there's a whole other piece that we can talk about at another time about how trying to be optimal on your position sizing. So there's loads that you can talk about. And again, it comes down to psychology. I personally feel like I can not look at my phone 500 times a day because I've got a day job to do if I've got a trade on with that stop loss in.
Yes.
I've made a decision.
Just sleeping better at night. Yeah,
It's sleeping better at night, but it's knowing that I've made a decision and I was conscious to say I'm right at this price, I'm wrong at this price. For me, I've done the work, let the markets then come to you, or not come to you, but that's how it works.
Pete Ward, come and get your boy here, will you? We can't get him out of this studio. Look, thank you so much for joining me. Everybody, we've done the budget preview there. Is it going to be a case of Rachel Reeves has been playing poker face with her headlines, or is she going to go Lady Gaga and we'll see the FTSE down further? Join us after the break for me and Esar.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Welcome back to Trade Expectations, and here we have the average intelligence of the room has gone up greatly. Welcome, and Isar.
That's very
back
generous.
to the show. Now, we've got a big event happening today in this budget, Isar.
Yes.
What do we want to look at with regards to that?
So I think today, whenever there are big events, people tend to be very focused on the events themselves and the sentiment around events. And so I thought today would be a good opportunity to talk a little bit about sentiment and when we should listen to it and when we should think about trying to be a bit independent from it.
And this is sentiment before the event, or?
So it's actually, I think there's three types of sentiment that are worth thinking about. There's sentiment before the event in the run-up, and I think that helps form market expectations. And so you often hear talk about like consensus numbers and then whisper numbers, and the whisper numbers are kind of secretly different from the consensus numbers. I think
we can, and sorry to interrupt, we can look at gilts there to see the sentiment.
Yeah, let's have a look.
It's just been, I mean, that into this over the past month.
Pretty miserable, isn't it?
That is a real drop from above 100 down to to sub 96. So that is the sentiment going into today.
Yeah, which is not great. And actually, we'll talk about, I think, why that is particularly bad in a second. But I think you've got sentiment in the run-up to an event. Then you've got sentiment during the event itself. So the budget is one of those slightly weird events, which is not a single one-off data report. It's actually a 30-plus minute speech.
Yeah.
And during that speech, you'll see sentiment swings in both directions. And it'll be really interesting to look today at what specific bits are getting the market to react and not. I think other good examples of this is typically when maybe Powell has a press conference.
That's the first thing that pops into mind.
Yeah, exactly, I think. And so thinking about whether we are really able to separate the signal from the noise there, and which bits are maybe market overreaction, which bits can we capitalize from in the short term. And then there's, I think, a wider question of sentiment, which is about like market sentiment more generally, or even if we're zooming maximally out, like economic sentiment more generally. And that impacts kind of what regime we're in. It impacts kind of
consumer spending.
Exactly, consumer spending or business investment, I think, is another classic example that following this budget is going to be particularly relevant.
Huge.
So I think if we take those three things in turn, most time on today is sentiment in the run-up to an event. So I guess my question for you, Rich, is why do you think there's such a heightened sentiment around this particular budget?
I think it's definitely nerves around, you know, it's the first week that Labour have been in power, there's been this, there is a black hole in the budget. You know, there's we've got to plug this. We're going to have to be tough. We're not going to break our pledge in raising taxes on the working man, working person, but we've got to raise taxes across the board. So
yeah, so I think there's something about the context and the situation we're in. I think if you layer on top of that how people feel about the situation we're in, there's some interesting polling that came out around the time of the party conferences where they were looking at cynicism in politics, and they found that actually cynicism is now the highest it's been basically on record. And so people have also gone in from the election with quite a negative sentiment more generally. And that is observable, verifiable data. There's actually a third thing that I think is really important, and maybe producer Fred can pull up a slide. So Rich, you haven't seen this slide. There is a huge amount of influence in how much people's sentiment gets heightened in an information void. So if you look, actually, the situation we're in is actually not that drastically different to 2010, when there was also a huge budget black hole in the post-financial crisis period, where we were running large deficits, and it was clear there were going to be very difficult decisions to be made. But
some talk around austerity.
yeah, exactly. Yeah. But between the date the government was formed and the budget was only 42 days. And actually, that was a little bit longer than historically. So under Thatcher, in their first budget, it was only 39 days. Under the Tony Blair budget, it was, under Gordon Brown, was only 39 days. If you go back even further, in some cases, you had snap budgets within 10 to 15 days of an election. And look at the Labour range. Yeah, and look at the Labour number. That is well beyond
2 months, a full 2 months later.
Yeah, exactly. It's coming up to nearly 4 months since the day of the election, which is, it's really crazy. And so when you have information voids like that, speculation tends to run more exaggerated and sentiment gets more heightened than you would expect in a normal kind of regime. And I think in particular, given the long amount of time, the information we did know was only directional. And so in that information void, people kind of fill in worst case scenarios, or like rumors start to circulate. And that's where a lot of, I think, the negative sentiment going into this event actually was around.
And especially if we look at what the FTSE's done. Yeah. Right now, okay, a lot of people say the FTSE is a lot more, it's global firms that are, just collected together. But there is the exact 4 months you're talking about, it's done nothing.
Exactly.
Do you remember what date the election was? Start of July.
I think it was July, yeah.
Because there was something else big happening, and it was going to be. But there you see the end of June, we were at 8,190, and today we're at 8,190.
Yeah, it's really kind of been a period of just oscillation within quite a tight bound. I think, actually, if you zoom out, this is probably true of the FTSE on a longer time horizon.
Yeah, true.
But I think in particular, it's been very up and down. Yeah, you can see exactly. That's crazy, isn't it? So I think, I think when you don't have information, you tend to have stagnant markets, because markets tend to respond only to like true information we get, or verified information we get as early as it can price it in. But we feel the heightened pressure going into that event. And so then expectations also start to get higher and higher and higher. And so when we finally do want to break out of that channel, expectation of the implied move is higher, because we've been range bound for so long.
And that's why I'm so surprised that the vol, guys, we can come out of that, thanks now. The expectation of in the implied vol today is so low.
I know, yeah.
Low on cable, it's low on FTSE. Is there an opportunity there? Because we've had that build-up of range-bound markets.
Yeah.
I could easily see the FTSE at 8,500 or 7,600 within, a matter of weeks.
And I think if you look at the last few days and the run up to the budget, there's been quite a lot of like negative news priced in. I think you can see some of the stocks yesterday took a bit of a hit. I think the reality is, if you think that that is an overestimation in just because we don't like ambiguity and we don't like uncertainty, then maybe that is an opportunity. At the same time, budget events normally are very like unsexy
Passive.
events. Yeah,
Yeah,
exactly.
yeah.
They're normally events that people don't tune into. And actually what you find is, so Luke Trill, who's the polling lead for More in Common, which is a polling organization, he yesterday shared some polling results which basically showed that more people are attentive to this budget than basically any budget in recent memory. And in part that's because we have this kind of heightened political circumstances.
Yeah.
We have people who feel the cost of public services under strain. We have certain budget announcements that are highly salient. And so actually when we think about sentiment, sentiment is often overly skewed by salient data. So for example, in this budget, there is likely to be, or there's been some front running, that the £2 cap on bus fares is going to go away.
Right.
And bus fares might increase to more than £2, even up to, I think, £3 is the cap that they're talking about, but we'll find out later today. For a lot of people, that is a day-to-day expense.
Yes, right there.
Exactly,
in
it's
your
there
pocket.
and you feel it. And if you're tapping a card, you get the notification immediately on your phone. And so that is a very salient cost to people. And so that is going to make them feel worse than something that is a bit invisible. So in the Tony Blair era, they spoke a lot about how a lot of the taxes were stealth taxes, which were taxes that people pay but don't feel day to day. And actually, if you look at some of the Reeves announcements, it looks like a lot of them are like the opposite of stealth taxes, which are things that don't raise that much money, but that feel quite front of mind and salient. And
Whether it's on gambling, whether it's on, and employers, the business confidence one is going to be really in the spotlight, because if she's creating a perfect storm of national insurance, minimum wage, and what was the third one?
VAT. She's frozen taxes on working people, which means she's not raising VAT. She's not raising the national insurance contribution from employees.
That was it. Yeah, national insurance for employers.
Yes, exactly. Yeah, but she's not raising income tax. But capital gains might be on the table. Employer national insurance might be on the table, which is a slightly sneaky one.
Yeah.
Compared to what they were speaking about in the election. And I think, I think those taxes are just quite salient for companies. And then some of the smaller things, because they've said, no, we're not going to change three of the biggest buckets of tax revenue generation, they then have to squeeze a lot of the other small taxes they have. And so that's where things like the bus fare have to get loosened, or things like taxes on like hot foods, like pasties might get looked at. And those things are very salient, even if they don't generate that much revenue. And so actually we spoke about sentiment in the run-up to events. The third type of salience is kind of, the third type of sentiment is confidence in the economy more generally. And some of these smaller taxes actually might really influence consumer comfort and consumer confidence, or even business investment.
Absolutely.
So if you're thinking on a very long time horizon, that might actually be one of the biggest side effects of this budget.
Got a quiz for you. You know we don't mind a quiz on this program.
You do love to surprise me though, Rich. I think
Yeah.
I come on and there's always questions that I'm not expecting.
It's deserved.
Yeah.
How many people pay capital gains tax in the UK each year?
Wow, I really don't know the answer. Is that
This is
that
like
as
a job interview.
Yeah, I know. It's like I used to work in consulting. They used to give you case study interviews where they ask crazy things like how many ping pong balls fit in a swimming pool, and you just have to kind of try and work it out live.
I know that you're stalling here.
Yeah.
That brain's working away.
Do you have it as a number of households or as a percentage?
Taxpayers.
Total individual taxpayers.
Exactly.
I'm sure it's a surprisingly small number.
Okay.
Because actually the number of people that own stock is actually surprisingly small. 60% of household wealth in the UK is held in housing. But that housing stock doesn't turn over that much. So I would guess...
Come on, answers on the comment section at
let's
home.
see.
How many people actually pay capital gains tax in the UK? Let's hear your guess.
Yeah, I'm curious what they'll say.
Because this, of course, is important today.
Yeah.
If you're raising capital gains from 20 to 25%, or even higher, is it 28%?
Yeah.
How many people that actually pay capital gains tax are going to go, no, I'm going offshore?
So I think, there's 20,000 households. We can do this case study maths. So there's 20 million households in the UK, roughly, give or take. probably the vast majority of them don't have assets, and the ones that do have assets don't sell them each year. So I suspect it's not more than about 3 million people, probably less than that.
Andrew McKelvey's going for 250,000.
That might be much closer.
I'll let you change your guess.
Okay. Okay. I would say it's probably, I think, more than 250,000. I think it's probably about 500,000 would be my guess.
Ooh, yeah, okay, you've come down nicely. 369,000 taxpayers pay 14.5 billion sterling in capital gains tax. It's highly,
not a huge number, yeah.
Yeah, which making it highly susceptible to behavioural responses.
Right.
Which is
exactly, yeah. Which is some of the sentiment stuff we're talking about, right? So I think actually when you're looking at a small pool of people, then actually even if a very, very small share of those people choose to change their decisions, maybe about business confidence or even reallocating where their money is, whether it's under tax sheltered vehicles or not, or whether it's kind of housed in the UK or not.
Or spread betting.
Exactly, yeah. And like actually that can probably make quite a big difference both to the amount of revenue they're gaining, but also actually in where the money's actually going. So I think you often see in markets this home bias where people invest a lot domestically. And actually the UK has less home bias than some geographies, in part because I think the FTSE has not performed historically super well.
Why would you?
Right.
Flat over that number of years.
But you might see actually an even lower degree of home bias where people might continue to kind of move money outside of the UK to try and avoid some of the capital gains tax requirements or in different vehicles and things like that. So given the small number, I would be a bit concerned from a sentiment side.
But the Treasury are very aware of that, aren't they?
They are, and they do behavioural estimates of how much it will impact revenue.
Right.
There's actually quite a good team that look at the modelling of like, they call it like optimal tax theory of like, if you increase tax a little bit, how much is that likely to change behaviour? The problem is that they're optimising for like tax revenue typically on like a 3 to 10 year basis.
Yeah, for the OBR.
Exactly, for the OBR. And also like one of the reasons we didn't talk about earlier about why the number of days to this budget is so much higher is because there is an allergic reaction post the Liz Truss budget, which was very rushed. So now they really want the OBR to have the full time to do the modelling. Rachel Reeves has been trying to like lay the groundwork of a lot of the difficult decisions that are made. But the side effect of that is actually people have had a lot of time to prepare and think about if they do want to move money or if they want to relocate. And that might actually lead to the behavioural effects being bigger than what we expect or bigger than the historical data would suggest.
And the media have had it front page every single day for the past 3 weeks, I think.
Yeah, it does feel like the scrutiny has been much higher than I think a typical budget would be,
Yeah.
She's also made the bold decision of normally when you do these budget announcements, the Chancellor goes and does the interview round the week before the budget. And whenever they're asked about the details, they can kind of say, well, I don't want to front run the budget. And they avoid being too specific. So this cycle, Keir Starmer did the round before and she's doing the media round next week. And so while the big event is today, what you might see is actually a little bit like what happened in the Liz Truss budget, which is where there was a huge market move at the day of the budget itself. But there was actually a secondary big market move following when Kwasi Kwarteng went on the media rounds. And he was asked to like think about whether they would undo any of the budget. And he said, actually, no, we're going to go further. And then the market move was even more extreme because the other thing about sentiment is sentiment begets more sentiment. And so you can often get these kind of herding effects, which are often not rational, but they are real. And you see them in the market movements that momentum kind of accelerates. And so if there's, for example, very negative sentiment or very positive sentiment following the actual event itself today, you might see that amplified on Sunday when she goes and does the media round. And then going into open on Monday, you might see even more movement in whatever direction we're likely to go, or you might see that dampen down based on how she performs.
So taking volatility into consideration, Monday is actually going to be a very interesting expiry as well.
For sure. And I think if you look at the implied move today is small, but the implied move on Monday is even smaller, which is interesting because it indicates people don't think those Sunday media rounds are going to be quite news moving. And actually, I don't know, like I don't necessarily agree with like that pricing, and it's rare that I look at market pricing and I'm like, I'm not sure you've priced in what I expect could happen.
Yeah.
But if I was selling vol, I probably would try not to sell vol on Monday, if that makes sense.
Yeah, definitely.
Because I do think the price you're getting is not as good.
And we're used to a very quiet UK news, finance news weekend, aren't
Yeah.
we? There's not, even the Sunday Times doesn't really break the big M&A stories anymore, because there haven't really been any.
Yeah.
I remember back in sort of 2005, 2006, you were having huge stories getting planted into the Sunday Times,
Yeah.
and even the Sunday Mail and things like that.
And there's like a phenomenon in media that they call cut through, which is where a news story goes from something a little bubble of people are talking about to something everyone is talking about. And the UK media landscape in particular, which is quite interesting, and on a different show we should talk about how you should measure sentiment, because there are some really interesting things you can look at, from like social media trends data to like market momentum data to like qualitative signals that you're seeing. So for example, like my favorite sentiment related data point in the US context is the Beige Book. And we should at some point open up the Beige Book on the show and walk through it, because I think that's a great example of qualitative data, and a lot of my research from a psychology background is specialized in qualitative data research. But for the kind of market sentiment going into the next couple of months, like I think we have an opportunity here of this news story cutting through, and that may lead to much more extreme moves than we expect.
Okay.
But we won't know that until probably Sunday, because there are very few moments nowadays where everyone is watching TV.
That's it, yeah.
And Sunday mornings are still one of those relatively uninterrupted mornings.
With Koonsberg on 9
Exactly,
AM,
yeah.
Right, so this is going to be really interesting. That is something I hadn't thought about, is that the moves might not necessarily be this afternoon, Thursday, Friday, but watch for the weekend as well. So, very well pointed out, Isar.
Yeah.
Thank you for joining us.
It's always a pleasure.
We've got another big brain coming after the break, because Angeline's back. So, she will be joined by Aaron Bright. Who thought I was talking about Aaron Bright there, eh? Angeline and Aaron Bright after the break. Isar, thank you so much. Will you be tuned at 12:30?
Of course.
Can't wait. We'll see you on the trading floor. We'll be back after the break.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket. Options. A hugely powerful trading tool with a wide variety of uses. An option is a contract that gives you the right, but not the obligation, to trade a financial market at a set price before a set date in the future. You pay a premium for this right. Options can have daily, weekly, or monthly expiry dates. Say you think the FTSE 100 is going to rise in the next week. Instead of buying the FTSE now, you purchase an option to buy it within the next 7 days. This is known as a call option. It gives you the right to buy the index at a set price, called the strike, before the option expires. If the FTSE moves above the strike at any point within the 7 days, you can exercise your option and buy for less than the current market price. If the FTSE drops instead, you can leave your option to expire, losing only your premium. But options aren't just used to buy a market when a market goes up. Put options give you the right to sell a market at the strike instead of buying. This can make them a great tool for hedging. Say you own Apple stock and are worried it's about to fall in price. Instead of selling your stock immediately, you purchase an option to sell it with a strike that's close to the current market price. If Apple stock drops, you can exercise your option to sell, preventing losses by selling above the current level of the market. If Apple stock rises, you can keep it in your portfolio, again, only losing the premium. You can also use options to speculate on price movements without ever intending to buy or sell the underlying market. That's because an option premium will change over time, depending on how likely it is the option will become profitable. If you purchase an option with a low premium, you can sell it on if it becomes worth more as it nears expiry. With IG, you can trade an extensive range of call and put options on shares, indices, forex, and more.
Hey trader friends, welcome back you dirty dogs, and we are live from the trade desk with Aaron Bright. Aaron, thank you so much for joining us. Aaron, of course, handles the smart portfolio here. Aaron, such an exciting week. I cannot tell you how key this is for those of us that trade and are active traders. Let's start off with something really close, counting down now. This pre-budget, is it going to be pre-Halloween horror, or is it going to be something of a damp squib? What are you expecting?
It's a good point. I mean, I think the rhetoric for probably 3 months or so it's going to be quite painful budget. I think Starmer's been very clear that there's going to be tax rises, and it's going to hit various bouts of people across the UK. So, yeah, it's a case of just tuning in and seeing the magnitude that Labour are going to take across various areas which haven't been largely taxed, over the years, or have been taxed at a lower level. Pensions, inheritance tax, and capital gains taxes are ones that I'm keeping a close eye on in particular.
Do you think capital gains tax will go as high as, I mean, I've seen numbers like 28, 29%.
Yeah, absolutely. I think that's a possibility under the current government. I had a conversation with my dad about this, and he remembers paying significantly higher capital gain tax than we do today. So whenever I complain about it, he says, "Oh, you don't have to pay what I paid," or "People nowadays don't have to pay that, so get over it." So I think that there is scope potentially for a capital gains tax hike, absolutely. And a substantial amount potentially, which will obviously hit investors who aren't don't have assets inside tax wrappers.
We spoke to Elliot Harris yesterday, who talked about cable and how we're seeing relative calm ahead of the budget. So I haven't checked in with him this morning, but are you also seeing that? I mean, could that perhaps precede chaos if it is really a shock budget and we see much higher rises, for example, in that capital gains tax number, and perhaps any changes in terms of employer pension contributions, that too, there's a fear out there that is going to constrict the economy. Any of that in view?
Well, it's an interesting point you're making about calmness in markets, because yes, there is certainly elements of calmness, but if you actually look at how the FTSE's been trading over the past 3-4 months relative to other international indices, it's actually underperformed. It's been quite flat, and I think that's some of that has been anticipation of a higher tax regime in the UK and potential increased borrowing. So I guess that's been on the radar for UK equity investors. The bond market has also had a little bit of a tantrum, nothing like what we saw in 2022 under Kwarteng, but its yields have been up a number of basis points, I think around 20 basis points over the past few months. So definitely, concerns about going all into the UK. And yeah, look, if we get, unexpected hikes or anything like that in taxes, or exceptional levels of borrowing which weren't anticipated, we could see spikes in yields and equity sell-off.
Loving that you mentioned Kwarteng, because I remember that vividly, and I can now not unsee lettuces across the world. Do you remember that?
Yeah, absolutely.
Yeah, it was such a bizarre time. I mean, looking at the FTSE, you're right, it is pretty much flat as a pancake coming into this budget. So it looks as if, if you're going to throw up my chart, it looks as if there's been this sort of, relatively factored in. There have been obviously other concerns out there too. Loads of news from even my local estate agents saying there has been movement on the seller side, people trying to get rid of their properties that they do not live in ahead of this. There's also mood music around Aaron, that maybe the government is going to take money from elsewhere and regenerate and push it into the housing sector. Some of those perhaps could move house builders as well. The other key thing that I've been looking out on, and you can definitely talk about, is oil. I've got a short position on oil. Rich is also short on oil. What's your take on the oil markets? Because you cover geopolitics a lot, don't you?
Yeah, absolutely. So we obviously saw Friday quite a unexpected response from Israel. They'd been talking about it for a while, but it came sort of a little bit out of the blue, and it was quite sophisticated, I would say, the response, but it wasn't as extreme in terms of the damage to oil facilities and infrastructure as sort of many expected. So we obviously saw oil slide, I think 5% after the attacks from Israel on Iranian military sites, and a lot of air defense targets stationed across Iran. I think the rhetoric is that Iran have said that they're going to now attack back, and then it's the issue is, are we going to be embroiled in a tit for tat situation where eventually it does escalate, and then we do get blockages in the oil supply, and then we get spikes in price? And I think that is probably where my concern is, because I don't see a path for peace anytime soon, and I see this tit for tat escalating. That's why I think there could be a spike in oil. Obviously, there could be still slides, as we saw, even though you think on the back of an attack on a country which exports a large amount of oil, you would expect maybe oil to spike, but obviously we saw a slide because of the expectations. So it's all about the expectations and what's going to come to fruition, but I certainly would expect a fair amount of movement in this market.
Let's just say we see continued tit for tat, but they don't seem to be touching any of the oil related sites. Would you say that is overall a downward arrow for oil prices?
Well, I wish I had a crystal ball for this question. It's a difficult one to answer. I think directly, yes, oil would probably have a bit more strength if they weren't directly going for oil. But let's say they bomb a port in southern Iran, which is on the Persian Gulf, and that's where where the Straits of Hormuz are and where a lot of imports and exports go out of. If there's disruption to that area, then ultimately, even though the oil facilities might not be struck, the actual logistics of transporting oil will potentially be hampered, which then creates all sorts of issues in terms of supply chains. And if we also continue to see blockages in the Red Sea, there could also be concerns over rising price of oil. So potentially, if oil's untouched, there might be some volatility both upwards and downwards. It's a really difficult one to call, to be honest, and it's really dependent on the level of response and the areas attacked.
Totally, and you're right. It's we've got the supply picture as well, the demand picture, the OPEC plus picture, which makes it all very cloudy. You sound like you know the area very well, Aaron. Have you been a lot to those parts?
Yeah, I have been. I've been to the Middle East a few times. Yes.
I've actually swam in the Red Sea.
Oh, really? Same here.
I found it unbelievably cold. I thought it was going to be warmer, but it was colder than I expected on the Jordanian side. But with oil as well, I guess the question is, so I'm short on oil, but I'm bullish on gold. Have you got a position on gold, and what is the position in terms of, for your clients as well, for the smart portfolio?
Yeah, we're a couple of percent of gold in our portfolios because, we're multi-asset portfolios where most of the returns are going to come from equities and also bonds. So we're never going to be probably more than maybe 5 or 6% in gold, I would say. And yeah, I think there's really good dynamic for gold. Particularly if we see real yields come down, if we see geopolitical instability. So I think we're quite happy with how the gold position's played out. We've had an overweight in gold for over a year now, which has been wonderful. Can't say that about every position, but this one's been brilliant. So obviously very, very happy with how this position has done. And yeah, I think that there are a certain amount of tailwinds that we can see for gold at the minute.
What hasn't done as well as you expected?
Interesting. I would say at the beginning of the year, many people probably expected longer duration bonds to sort of the yields to come down on those a bit. Obviously, we haven't seen that. We saw a rate cut in the US, and we saw long end of the curve yields come up, which typically in a rate cutting environment you'd expect yields to fall. So that is caught people by surprise. But then you've got the lingering inflation picture in the background, concerns over national debt, concerns over the election and what the expenditure can be. So when you sort of open up the bonnet, the mechanics are understandable of why the yields haven't come down. But I guess if you look at just the pure macro, yeah, I think that probably caught some people by surprise, I would say.
Now, we got a mention here from Monkey Man who says that if oil prices go up and subsequently everything else, this will feed into the U.S. economy. Presumably, that might change the Fed's sort of rate stance going forward.
Yeah, I totally agree with him. Absolutely. When I was having this discussion with people recently, actually.
And it's also interesting that we have this big week with not just inflation, but GDP, monster week with earnings, of course, but also that non-farm payrolls. I've got my own theory, which I'll share in a bit, but we've got a viewer asking for your opinion about where oil prices might head depending on that non-farm payrolls number.
Yeah, it's a really interesting question. That if we're seeing a weakening economy and we see a non-farms payroll come well below expectations, I would expect oil to probably take a little bit of a hit because obviously oil is the lifeblood of the global economy, and vice versa. So that's kind of how I see that one going. But there's obviously various other economies around the world. China probably being the most significant one, which determines oil prices. So US is obviously the biggest, but there's many moving parts and many moving factors in the price of oil that we have to consider. Geopolitics, Chinese demand, and I guess US economic growth as well.
And speaking of the US, I mean, this is something I just can't get my head around, and I know you've been many times. They've started already voting since the 26th in some states. I'm just going to show you a picture that I just got sent this morning from my cousins in Michigan. Beautiful skies there, autumnal leaves, and everyone is heading, in Michigan anyway, seem to be heading to the polls earlier this year. I mean, Aaron, are you getting a sense that, ahead of the elections, many people who were Trump voters will stick with that? Those who are Kamala voters will stick with that, and really, down to the wire, it's a case of getting people out now, getting people out in numbers to vote. Is that the sense you're getting as well, or not?
Yeah, I think that there's going to be a lot of silent Trump voters, a bit like you have silent Tories here. So I would expect, and I've had this view for a while. I might be wrong on this, but I do expect Trump to be president come January, or well, come November, but to be inaugurated in January. I think there's a lot of people who are, from what I've heard, who are reverting to Trump and have been displeased with some of Biden's policies and what will be Kamala's policies if she gets elected. So my gut and analysis is telling me I think there'll be a Trump victory, but elections can always surprise us, particularly when the polls are fairly close. But that's how I see things unfolding, just based on what I've seen.
Especially the U.S. elections. You're going to be the person that I'm going to drag with me to the U.S. Embassy. They have a big party that night. We're having to go to break. I'll get the question on sanctions on Russia with you another time, but thank you so much for joining us. Always a pleasure. Aaron Bright from the IG Smart Portfolios.
Thank you.
Welcome back to Market Measures, where we take you through research behind the trades.
So, Ange, we are looking at expected moves and how often are those overstated, right? So we're going to go through all implied vols. We're going to look at the FTSE and the cable trades that we've done today. But let's get stuck into it straight away. So, expected move over statements. Right, now option prices provide an expected range for an underlying in a given time period. Okay, so here you see the spider 30-day 1 standard deviation expected move, which is great because that's what we talk about, don't we? What's the expected move over a given time period? Now, you can see there from the current state of play at 585, we've got a 5.3% expected move over the next 30 days, which can take us up to that Goldman Sachs target of 620, or is it going to be lower post-election down at the 550 level?
Now, this is what I love about this chart too, that you have this cone, and many people don't realize, but there's implied volatility for every financial instrument.
It's just so useful to know what that, well, especially what the 1 standard deviation expected move is, but also what's priced in to the options. Because what we're going to see today is that a lot of the time the implied vol is overstating the expected range. So we use the following to calculate that stock's expected range. More specifically, where it is expected to be with a 68% likelihood, i.e. 1 standard deviation, the calculation is expected move equals price times implied vol times the square root of days to expiry over 365. Nice. Right. How do we put that into more simple terms? For example, strangles benefit if the actual move is less than expected, right? Because remember, if you sell those 16 delta puts that the Tasty guys really highly recommend from their research that is the potentially best trade to make. Selling the 16 delta put strangle if the implied vol is high enough. So in the next slides, we'll compare a 45-day, one standard deviation implied moves in different markets to the actual 45-day price moves. So we're going to go into that, but just to give you an example of what we're talking about, as I said, in today's FTSE options, right, if you look at that expected move, so we can get a real idea of where we're going with the implied vols. If you have a look here, right, the implied vol is 19.5 on today's 0-day expiry FTSE options. So 19.4%. So that's saying around about just over a 1.2% move in the expected move on 0-day expiry. So is that going to be right? Is that going to be the move on the FTSE today? Well, that's worth wait and see, because of course we've got the options. And then we're going to go on to the spiders as well. So spiders, we're looking out to December. You see that implied vol for at the money is 20. What are we up to now? If we go to that at the money, so yes, well, 18. So current implied vols are around about 18 on the spiders. Okay, so going back to that research there. Right. The expected percentage of time that the actual moves are less than implied is 68%. For equities, it was much higher, suggesting that the markets are less volatile than anticipated by option prices. So the expected move, 68%, the actuals are even in the 80s, right? So 86% in the Spider, 78% in the QQQs, and 85% in the Dow Jones. The commodity ETFs that we like to trade saw similar expected move overstatement, but not to the extent of the equity indices, right? So you've got actual moves there of 72%, 69% in gold, and 80% in silver.
69% in gold.
69%. So that comes in line with the expected move.
Right.
So gold's the only one that the actual move is equivalent to the expected there. Now, finally, individual stocks had similar expected move overstatement as the broader equity indices. So you can see there the, well, two big tech names, Amazon and Google, both around 10% higher. Goldman Sachs 76 and IBM at 85. Right, so we've had a look at those different types of markets with an overstatement in their 45-day expected move, and that's in a 15-year study. But next we can actually test the overall market in different implied vol environments. And this is where we're going to teach you about implied vol rank. An implied vol rank is very useful because it tells you where is today's implied vol relative to where it's been the actual realized moves in the past. So if we go back to the Tasty platform, let's see if we can find out where to get you that, that IVR. If we're going to trade at the money put, where do we see the IVR there, Ange? Where has it gone?
Are you on the left-hand side next to gamma as the implied volatility, but IVX.
So yeah, so that 19.9% is the current implied vol.
On the right as well. If you move further on to the right-hand side, IV rank 32.2.
Great job. Thank you, Angeline. So yeah, IV rank there, 32.2. Now, if it's under 50, right, that means that it is lower than the current implied volatility is lower than historic volatility going back in time. Right? Now, in those cases, you might be a little bit more hesitant. The lower the IV rank, the more hesitant you would be to sell options.
But the higher,
exactly,
then you'd be more sort of encouraged, right?
You're going to receive more premium, especially if it's over like 50, right? If on an IV rank of 50, you'll see here in the research that we really get some kind of bang for our buck.
I love how Rich was asking the person with negative 800 power, the IV rank. I just happened to notice that because I was looking around the other day. What's also interesting is that by looking at this, it filters out the noise, right? And just gives you a good signal as to how to approach if you're putting on a strangle, or you're putting on an iron condor, or you're putting on just a, naked call. It gives you a good indication of how to approach and set up the trade.
That's exactly right. So if we look at the spider over the last 15 years, then this table shows you down the left-hand side where the IVR rank is, if it's between 0 and 20, 20 and 40, etc. And then across the top, we've got column 1, the average realized move. Column 2, the average expected move. Then we look at the breaks to the upside and breaks to the downside. And that bottom right number, 31.4%, when the IVR rank is 75 and above, that shows you the biggest danger of a break to the downside, of course. So in that case, it was 31.4%. Ouch.
Wow.
Excuse me. So let's look at, though, where do we sit? The average expected move is higher in all cases than the average realized move on the left-hand column. So that is your opportunity to make money from selling those 16 delta strangles. Right, Angeline, what are the takeaways from today's market measure?
Right, so here they are. Expected implied moves based on implied volatility are generally larger than actual moves that markets have made. Equity indices and individual equities tend to experience consistent expected move overstatement, while commodity expected moves are less overstated. This is really interesting for me because I like trading WTI and gold. Expected moves exceeding realized moves is a key source of the statistical edge that option sellers benefit from in exchange for accepting the risks of undefined maximum losses.
And that was today's market measure. Shall we take a look at the gold market for you then? Shall we put this into practice?
Yes, definitely. Are you still long? No, are you still short?
Well, I'm long in my ISA. That's, sort of been for the last, God, it must be about 50% now, I think. So now and again, I'm tempted just to hedge out the downside risk if it has a little snapback. No position on it right now. But if we were going to look at the options market for 51 days out, let's have a look at where that IV rank is. 73. We are currently on GLD, that's the gold ETF, 73.5. So vol is high in gold right now, perhaps unsurprising after that move.
So what do we consider high? Anything above 50?
That's right, anything above 50 is high relative to its own history. So where are we on GLD for, if we wanted to look at the 16 delta strangle? So we would receive 138 on the put. That would be selling the 242s, currently 256. So we're talking about, God, that's not a big move, is it?
No.
That's only 5%, is that right? Not even 4%. So a 4% move down in gold there, we'd be selling a put. and you receive 0.5%. And then the 16 delta on the upside is selling the 275 calls, which again is about a, what's that, 20, about a 7% move higher, and you see 136. So in total, you're receiving $2.74, just over 1% for selling that 16 delta strangle with an IV rank of 73, Angeline.
Not bad at all. Might be one I look at. Will be one that I look at if gold starts turning against me. At the moment, I'm still bullish gold, and falling with the higher highs and higher lows. So it's just showing you my chart here. I did tell you yesterday when I tweeted. Rich has come to the point now where he's like every day at 4 p.m. he gets this annoying text from Angeline.
Oh, it's a great text. It's my top text of the day.
It's kind of cryptic. I go like 2775. If this breaches, then it will head higher. And so currently it's still heading higher, and I am waiting. So the next level insight will be 2785. If it breaks through that, then I'm looking at like sort of 10 points each time, because we've not been here before, right, trader friends? Let's be real about this. We've not been here before. So
uncharted territory.
Exactly. But the trend is your friend until that breaks, and I'm watching this, and I've got my limits in place. I keep walking in the profit. And if it starts changing, I'll take it off, and then see how I can play this on perhaps the downside, or maybe put one of those options trades in that you showed me, Rich.
Yeah, because that does make it makes it interesting when you've got an IV rank of 73, as Sahil points out in the market measure. That makes it tempting to sell.
Yeah.
But if you're doing it over 45 days, that now takes in the US election. So brave.
And a lot else in as well.
There is.
We'll get to the break. We'll talk you across all the risk events and the trading opportunities in the next few minutes.
Hi, I'm Sean Newson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back there. You saw the advert for Tom Sosnoff's UK tour. It is now Tom Sosnoff and Rich's UK tour, because I am going to be his trading monkey sitting at the side of the stage, tapping away 50 trades in 50 minutes. Come along. There's still tickets left for Birmingham, Manchester, Dublin, and good old home sweet home Edinburgh.
So trader friends, if you want to come and throw bananas at Rich, you know where to head to. I will be at the London event, so please do come as well, because I'll be watching. And
we're sold out though. Sold out London. Capacity has been reached. But if you do want to get tickets for any of the others, go on to tastylive.com. You can sign up for free, and you can also go to Eventbrite and search for Tasty and the city that you.
I'm sure people will just rock up and say, I know Rich, and he's already signed me
ID,
in.
you're not getting in.
As happened before.
I literally had that text message from my friend Rishi yesterday.
I've hosted last summer at the O2, and there were people that rocked up with no tickets. And there was a long queue. Don't do this, trader friends. Do not be those people. Long queue people having to log in outside the O2 trying to get a ticket. Okay?
Hey, Rich. Hope all's well. I tried to get a ticket for the event with Tom, but unfortunately they're all sold out. Do you think I could turn up on the day and just maybe they'll let me in?
Ah, you see?
Don't be that guy. So make sure you sign up now, or you will be the last one on the list.
Also, not making promises, but they tend to have freebies and gifts, right? So don't be that person that can't get in and then is trying to ask for a freebie, because they run out too. Right, so let's take a look at the all sessions whilst we're at it.
Yeah, that AMD now down 8.5%. Down 8.5% AMD. Following it lower are ARM Holdings down 2.6, Qualcomm down 2.8, and Nvidia only down 70 basis points at this moment.
I really also like Caterpillar because we're expecting results quite soon from Caterpillar and a whole raft of other companies as well. They include Meta, the big one being Meta, right?
Meta tonight, aftermarket.
Ooh, and also we've got Microsoft, we've got Coinbase, Robinhood, Etsy as well, eBay, says producer Fred. Microsoft, I'm very, very excited about. Do you trade Microsoft?
I do. Yeah,
great.
it's the one US tech name I am actually very comfortable trading on because it's dependable. I feel like it's just that real because it doesn't move. It's not as volatile as the others, is it?
Yeah, and also it's kind of like they have certain things that they have to say, and there's an expectation, there's an outlook, and they tend to kind of flag up what they are looking at doing and what's coming down the pipeline.
How's that looking on the technicals, Angeline?
Is that the daily chart?
It is indeed.
Yeah, so I, like you, I quite like it because it's quite stable as well, and I think there could be further upside. What I am looking out for specifically is, have you heard of Jarvis?
Yes. What do you think?
So I think if they can pull this off and they can, show that it's working really well, I think there are plenty of expectations out there that this might actually lift the company's share price. Jarvis, Trader Friends, for those of you that don't know, is aptly coined after Iron Man's. Is it Iron Man? No, one of the characters. It is Iron Man, isn't it? Jarvis. Get me the coordinates.
Not my world.
It's basically a butler, a digital butler. And there's an acronym for it, which kind of says, someone who's, actually quite smart. And it sounds a bit scary at first, but you can think about the applications of this, right? So Jarvis will look at, for example, Rich's, Google searches or what he's been looking at on his phone, and then it will try and anticipate, what he likes and what he needs every day. So if Rich checks the weather, like I do every day before I step out the house,
Highland Spring Water.
Highland Spring Water, Jarvis will order or say, Richie Rich, would you like me to order you 3 cases of Highland Spring Water? And by the way, it's going to be rainy today.
Will Jarvis tell us what the expected move in the stock is after hours?
That was my next key thought. Will Jarvis?
So if we look up here, we're looking, excuse me, at a vol of 70. So what do we know, Angeline? We divide by 19.
Yes.
And we get that expected move. What's it going to be? Everybody reaching 3.7%, is it?
Yeah.
About 3.7% expected move on Microsoft. So as I say, not quite as volatile as the other, it's in the US tech land. But what about Meta? What's your guess for Meta? Shall we have a look at that one as well?
Let's have a look at that one. Meta is a bit tricky because in my guts, I'm kind of concerned that they are going to say something down arrow about those glasses. So let's have a look at your implied volatility first. What have we got?
120 divided by 19. We're looking at 6.3%.
Wow, you're really good. You deserve to be
6.31.
top of the list in your maths class. I hope your maths teacher is listening.
And then we talked about that IB rank earlier on today, so that's at 55. What do we think? Where is Meta on the year?
Meta on the year. Let's have a look. Add to workspace. Right. So this is the daily chart, people. So it's done really well, actually. Let's also have a look.
I'm nervous of that.
Oh, I know. Let's have a look. 89% long on the IG platform. Sometimes they use this as a contrarian indicator because it means too many people are in already. 89% have long positions on the stock. There's also a very handy fundamentals page. I have to say, I do have this in my pension. Mm-hmm. But on a shorter term view, I'm actually quite concerned because it's had such a run, right?
Your pension must be looking amazing. You've got Meta, you've got Nvidia all over the place.
I couldn't get away from it, literally. And
Have you not done anything yet? You promised me you were going to do something on that.
Because I think that I've also got Microsoft, so I think they're going to do well. And maybe after this, earnings season, then I'll go for the
Always a little bit more. Come on, Goldilocks. Always wanting a little bit more.
And also finding out what happens after, this coming Friday. I might take some off before the election. So the election is a key risk point.
Right, GBP, USD, big budget day today. We've got 2 hours and 30 minutes left. Where is the great British pound going to finish the day today? Trading 129.97. So we had a high of 134 only 3.5 weeks ago.
Yep, and also it has to be said that the pound against the dollar has surged 11% on a trade-weighted basis since the mini budget shock, the Kwarteng shock, right?
Yeah, do we want to horrify ourselves and remember?
No, actually, I've only just got through,
is.
therapy, and I told Aaron Bright I'm still seeing lettuces every time someone says budget.
Look at that. So over.
Oh my God.
From August the 14th to November the 30th, it was even at 121. But in the meantime, we dropped intraday down to 103.
Yeah.
Please let there not be that kind of move today.
Yeah. It was September 2022 when we saw a failure of the cable rally from 103.47. There's still,
Having said that, what an opportunity.
I know, right? What an opportunity. I just kind of think, yeah, if we come and look at our daily chart now.
There's the story since.
Yeah, I'm hoping, right? So optimistic Ange is hoping that we don't get a shock, that we don't get a reprise, Kwarteng reprise, that we get something sensible out of RR.
I am optimistic.
Yes, and then we can see that perhaps this can leg up, that slight little leg up there, continue into the upward channel. I mean, that's just my optimistic point of view. The fact that RR worked at the Bank of England, I'm hoping will give her a steady hand.
Exactly.
She was there for 6 years, people.
So, oof.
Yeah, technical analysis can give you a guide, right? And fundamental analysis can tell you how hard to hit it, okay? So technical analysis can give you an in point and an exit point, and fundamentals can tell you how hard to hit it. But when you get, events like the US election, like the budget, especially after the Kwarteng debacle and the Liz Truss debacle, it is one that is down to the wire. So I would say...
Shall we have a look a few weeks out and see... Let's go past the US election and let's have a look at a 132 call option on cable.
Yeah.
How rich will that be?
Let's have a look.
If we had a double whammy of a fantastic budget from Rachel Reeves and a worrying US election, what would we pay for a bit of belief in the UK? And let's look at 15th of November weekly. 132s are only 38 ticks. I have got to have a look at some of that. I'm a believer. Already long the pound, obviously.
He's a believer. He's going to reaffirm his belief.
There we go. 132 calls. I'm paying 38 ticks.
Zoom in a bit for our trader friends.
Absolutely incredible.
Yeah.
38 ticks for the 132s. So I'm looking forward to go back onto where I saw the chart of it going up to 133 and beyond. I'd much prefer play it through the options when the ball's that low than have a position in the underlying. So I'm nervous, as is the whole country today, I think, but I have strong belief in Rachel Reeves of delivering a budget for the people.
Come on, Rich. Come on, Double R.
One of my friends messaged me earlier and said, I cannot believe that you support the non-dom, the restrictions on the non-dom. So I apologize, Dougie.
Non-dom. Yeah, Dougie's non-dom, right? Dougie! So let's take a look at jobs now. And also we have a question from Bilal. Bilal, good to hear from you. Now, oil is a really interesting one. And before I pull my chart up, we are going to play a game. Are you ready?
We're ready. We're ready for this.
Do you like game shows? Bilal, do you like game shows? Do you like game shows?
Yes, very much.
Bilal, this has got to do with the non-farm payrolls. Bilal has asked, how should I trade? How will oil go? How do I trade it with the non-farms, right?
Now look at the expectations. Doesn't ruin the game, does it?
No, it doesn't ruin the game.
Okay,
No.
let's have a quick look at the expectations
Yeah.
for Friday.
I think it's 30. Is it 30?
Friday non-farm
My memory's
payrolls
not so
looking
good anymore.
expectations of 115,000, an unemployment rate of 4.1 and an average early earnings of 4% year on year. Talk to me.
Right. So do not take my chart just yet because it'll ruin the surprise, okay? It'll ruin the surprise.
I won't look.
You don't look, and all our viewers don't look as well, okay? So, are you ready? I wish we had some sort of game show music. So, not yet. Producer Fred's like, can we show the chart? Not yet, because that's the grand reveal. So, Bilal said, how do I trade oil if we get a weaker than expected number, right? So here's his question, trader friends. So, there are caveats here, Bilal, because with oil, it's multifaceted. So, caveat number 1 is, I'm going to let Rich show you because he's my beautiful assistant. Caveat number 1 is, go on, Rich. Can you see that? Geopolitics stays the same. Okay, Bilal? So you have to remember this. If nothing happens, Ukraine-Russia, nothing happens, then this trade, which I'm about to show you, remains the same. Number 2, beautiful. No OPEC plus action. He's really good at this, isn't he? It's good. He can do this for like a real living.
Okay.
Caveat number 3. Weak demand, especially from China. And we know that that currently is the case. Well done, handsome Rich, my wonderful, beautiful assistant. So, Producer Fred, you can now show my chart. This is the setup. So, 115 expected, 223K prior. If we get a weaker than expected number, then oil prices could fall. And of course, we went through the caveats there. And I've got these yellow lines here. If it falls, it will try and get to 6500. Can you see that line there?
$65 is the target, right? Okay.
Because it has crossed down below that 67 line. And I want to see it cross down, hopefully again, before that non-farm payrolls. Because, you know, any cross below is, you know, a signal. But in the world of technicians, 2 is a stronger signal, 3 is confirmation. We've already had 3 since September, and I want to see even more. The more crosses you have below that, the more of a confirmation that we could drop to that 65 level. But of course, the caveat, as you saw Rich show us earlier, geopolitics stays the same. No OPEC plus action or words to show that they're going to act, and demand stays weak, especially in China.
Excellent. What a show. What a show. Pre-budget special. We'll be back tomorrow. Where will the FTSE be? Where will the pound be? Where will Angeline be? Where's Wally?
Bilal had one other question, but we're 2 minutes over.
Yeah, overtime's done.
We might have to do this tomorrow, but he asked about, just a teaser, how to trade, how did the DAX and the others trade in the other indices? You know, if Trump wins, how will they trade? So I've got a position on that too.
Coming up on tomorrow's show. Good luck in that auction. Auction. Trade responsibly. Remember your risk management. Remember your stop losses. And best of luck. We'll see you tomorrow.
What is going on, and welcome back to the Bad Taste segment. Today is Tuesday, just a week ahead of election season, and we'll see how the market plays out. But how are we doing today, Julia?
I'm hanging in there. I don't know. I tried to
Just
stay
hanging
responsible.
around.
Just hanging around, trying to stay responsible during this. Funny enough, even though we have so many companies reporting this week, we have such a loaded earnings week ahead of us, and actually some names that just reported not even an hour ago. I'm actually not as worried as I probably should be, because I feel like we've seen a lot of these companies perform pretty consistently. I feel like a lot of the volatility that we've been seeing these days has been in DJT, crypto, Bitcoin, a little bit of like semiconductors, but I don't know. How are you feeling about everything?
Um, Kind of choppy yesterday. Trading some Nasdaq got chopped up yesterday, like 300 just gone. So today, nothing really too much. Really just focus on my QQQ position, and really not going to be doing too many directional trades, especially heading up to election season or election time next Tuesday. But other than that, just been eyeing QQQ, SPY. I've been eyeing earnings. I'm not going to take any other earnings trades. I think 3 so far this year. I think you've been holding strong, and I don't think you've
I have
taken
been
any,
holding
right?
strong.
Yeah, yeah.
Yep. I've
That's
been
good.
holding
That's
strong. I've been doing like post earnings plays. I actually have a position on right now in ENPH, and that
okay.
one's like business. It's actually doing pretty well, even though it's still like 50 some days out. But that
Mhm.
being said, I think like AMD is going to be an interesting post earnings play. They just reported, yeah, like an hour ago, as well as some other names in here, maybe even like Mag 7. But honestly,
Mhm.
like there's still like a decent amount of volatility, inflation, even in like the Nasdaq. So like even for like post earnings play or a little bit of, I call them diluted earnings plays, trading like
Okay.
like a tech heavy index instead of the companies themselves for earnings, like one
Right.
way to do it as well. But yeah, I feel like I should be more worried. I don't know.
No, I mean, what are your thoughts on, just the overall market with the week left into election? You kind of just putting it on the back burner, not like a big deal, or like where's your head at right now?
I'm having a hard time making sense of it all, I guess. Maybe perhaps that's just me. But in terms of like the election and how it's going to impact markets, I mean, like been seeing a lot of really interesting movement in the crypto space. I feel like regardless of who winds up actually winning, like it seems like both candidates have had pretty pro crypto stances, although Trump has certainly been way more in favor of cryptos. Or just like the kind of DeFi space in general. Bitcoin trading at 73, just smashing through all-time highs. A lot of
Right.
optimism in here. So curious to see how this responds again to next week. Not trading a lot of crypto myself, but I'm a little annoyed too because I was trading Bito for my dividends.
Right.
Might get in on them again. I think like Thursday, well Friday. I think it's either Thursday or Friday is the last day you got to get in before you're no longer eligible to receive the next dividend payment. And you know how bad. It's bad when Bitcoin is smashing through all-time highs and Bito's like you just can see how much of an impact these like fees and dividend payments are having on the underlying itself, even though it's supposed to track, Bitcoin kind of one for one, kind of learned from that experience messing around with it that it's not, I'd say like a buy and hold asset. Let's put it that way.
Yeah.
So a little bit annoyed that I got out. I made money with the dividends, but kind of was a scratch on the shares themselves. Would have made a
Mhm.
little more money if I'd stayed in it, but I think that would have been an unwise decision, perhaps. But yeah, that's been kind of all over the place. Are you in anything crypto right now?
No, really, I'm not exposed to anything in crypto right now. I mean, sometimes I would take a peek at Beto, but nothing active in there. And then at the same time, I'll keep up with the crypto market, but not much exposure, especially in the Tasty account at least. But what are your do you crypto exposure just Beto for the most part, or are you more of like a long-term believer, or what's your kind of stance on crypto, Julia, so we can elect you next for president?
Oh yeah, the platform. We're slowly patching together the Bad Trader platform for anyone interested. We're still piecing that together, but no, I've been pretty bullish on just like the whole crypto space in the very long term. But I kind of feel the same way as I do about like renewables, as
Mhm.
cannabis. Sports betting to an extent, which is like until there's a good amount of regulatory clarity, I think that's really going to limit like the tradability of like some of these sectors as a whole. I'm kind of feeling the same way about crypto
But we've been seeing, yeah, like integration with like very traditional payment processing services, financial institutions, and I think that's been very promising. So I think in like the long term, I'm pretty bullish as well. But like in the shorter term, and when I say short term, I mean within the next like couple months to a year, I think it's going to take a little bit more regulatory clarity for this to be kind of more comfortably tradable the same way as like other more established like currencies are for the moment, for the time being.
No, I hear
That's
you
my
most
take. I
definitely.
don't know.
I just started seeing a lot more content on social media and then just, getting texts about, yo, have you seen crypto? Have you seen crypto? Have you seen crypto? I don't know if you've gotten any of those messages throughout the last few days with crypto going to all-time highs, but it's definitely a little bit more relevant again. And I'm never mad about that. I always like when there's more attention on any market for that matter.
Sure. Yeah. It kind of gets more attention paid to the space. And I kind of, yeah, I'm feeling the same way about like nuclear, a bunch of other types. Like, so there are like a couple different nuclear and renewable energy ETFs. Like TAN is the solar energy ETF. This one I've been wanting to get into, but it's trading at $38. It does have options, but the liquidity on some of these strikes is okay, but it could be a little bit better. ICLN is like the clean energy ETF. Liquid, right? There's options, but the liquidity could be a bit better. And then like MSOS, MJ, any of those like cannabis ETFs, it's kind of the same old situation where they're just like a little too cheap to trade, at least for the strategies that I like to do. And the liquidity, at least on MSOS, looks a little bit better. But yeah, some of these other companies, I feel like Coinbase, there's definitely certain like individual crypto names that have like, I think the liquidity and the cap, like the per share price levels to be able to trade pretty easily. But otherwise, like just to get diversified crypto exposure, it seems still maybe a little bit limited, but y'all can let me know what you think.
Yeah, I know you kind of touched on solar for a quick second. I wanted to ask, are you bullish on solar and in that industry?
100%, yeah.
Yeah. No, I've just seen a lot more about it, a lot more conversations out here about it, a lot more people just doing things within solar. So I was like, I wonder what kind of underlines give you some exposure to that space.
There's TAN, although like nuclear is potentially gonna shake up the space a little bit, because I wouldn't call it like it's definitely not renewable. Clean is a word. I don't know if I would apply to nuclear. I'm not sure like exactly how it's classified. But I think like nuclear just in general is going to make a pretty interesting shakeup to the energy space. It already has been, at least as reflected in the markets. Nukes is a nuclear energy ETF. I don't remember exactly what this stands for. I know something here. Let's see. Nukes ETF. Nuclear Renaissance Index. And then there's also, what was the other one? I had another NLR, which is, I think, the uranium and nuclear energy ETF. So there's a couple different nuclear energy ETFs. And those have been, since September, they've been doing pretty okay.
Yeah, okay is an understatement.
When it comes to like other nuclear names, it's kind of the same situation where there's like, same with sports betting, same with cannabis, like there's a handful of single company names that I think are relatively tradable from like a liquidity and price level perspective. Kind of the same story with nuclear, where there's like a couple names that give like good nuclear exposure. I think it's like VST is one of their sleeper builds that actually has a decent amount of VST. Let's see, Vistra Corp. VST, which actually has a decent amount of nuclear exposure and very nice liquidity, like plenty of open interest, plenty of strikes, plenty of durations available. Going to be reporting November 7th. And just like kind of in general, to shake up the energy space. Yeah, energy's been all over the place, so
a little shake up never hurt nobody. I mean, depends. You're asking.
Depends on like which side of the shake up you're on, but
yeah.
But what are you gonna do? Anything?
Oh, what'd you say? Go ahead. No, I mean, I just had VIX pulled up right here, but if you're asking anything other energy related, no, really not looking at anything other than volatility index. I mean, we're sitting right below 20, Julia. Maybe post-election more volatility. I was hoping for a plus 20 VIX pre-election, but we'll see what we end up getting.
We're going to have to see. Yeah, I'm kind of expecting to that nano nuclear energy. That's Edward also brought that up, is an interesting play. This is another one that's a nuclear energy company, and also decent liquidity in here, but still, again, it's a little bit cheap to trade. That being said, like IV index of 177% for some like directional strategies, I could see that being some interesting plays in there. And then, sorry, just looking over here at chat. Very, very nice. Yes, cool. That's what I was going to say. Yes. So I'm kind of expecting a bigger shakeup from the election as opposed to like this crazy earnings week that we've been kind of having so far. Reported earlier today, we can take a look at like how things shook out. McDonald's was flat on the day. That was crazy. Did you see what happened in here?
I did not. I mean, if you're talking about the E. coli breakout I seen, but other than that, wow. Mixed
All
emotions
this
is what it looks
all this
like.
bullshit just to land flat on the day, down, well, not flat, but like down 0.5%, which I mean, it's IV rank of 44, could totally be an interesting post earnings play in here. That one, I don't think this was much down to the E. coli. I think that's probably going to have more of an impact on the following earnings cycle. I think like inflation and inflationary pressures affecting lower income consumers is still like the primary driver for some of this price action. We also had Pfizer reported today down 1.4%. PayPal, I know how we don't like to talk about PayPal, but that was down 4% today, also off of earnings. And then Crocs, of course, down almost 20% if you're keeping up with them.
Crocs. I know Terrell earlier was bringing up some of the earnings for the weeks, and I kind of pointed out Crocs. I know 2020, was it 2020, 2021? I think it was 2021, 2022. I mean, Crocs was screaming to the upside. And I mean, just the brand was getting a lot more popular. I mean, I even got Crocs, and I would have swore I would have never purchased an item like that in my life. But good to hear Crocs is a little bit relevant again, but they definitely took a hit, it looks like.
Took a big hit, yeah. And Crocs,
Yeah.
I mean, dude, I just see them everywhere. But then again, I also see people drinking Celsius everywhere. So I guess take that for what you will. I saw this funny. Let me see if I can pull this up real quick.
You don't have a pair, Julia?
What'd you say?
You don't have a pair? You haven't taken a drink out of Crocs Kool-Aid yet?
I couldn't. I wouldn't.
Mm.
I would
I was
never.
Yeah, I was the same way.
I think like I was okay, because I saw this post. I thought it was funny. I was perusing Wall Street Bets today. Crocs are being banned in USA schools, and I go along for it. So when I was in school, we had Birkenstocks and the potato shoes, and those are what got banned in schools because everyone was like, "You're gonna trip."
Really? Those are very popular in Colorado.
The Birkenstocks?
The Birkenstocks. Birkenstocks were so popular in Colorado. It was a Birkenstocks with the hydro flask. That was like the Colorado Kid starter pack.
Oh, dude, it's that. I mean, they're kind of nice shoes, actually.
I like
They got a
them.
lot of shit, but I think they're nice shoes. Oh, Grumpy Mike, I'm gonna stick with my slides. Oh, wait a minute. Oh, wait, I'm never parting ways with these. I love my slide. There we go. Love my slides. I don't know if you can see that past the.
Yeah, with the cat on it. There we go. Oh, I like that.
I love my slides.
I thought that they were banning Crocs or Birkenstocks for like, oh, that's too leisure for school, or that's like you're wearing slippers. I thought that was the reason. I didn't realize it was like a health hazard in terms of tripping and things like that as to why they might want to ban these type of shoes.
Here's my guess. My theory. Okay, total side note. I'm gonna show my age. Do you remember Silly Bands?
Oh, absolutely. Those went crazy.
They were the shit.
Those popped off,
but
yeah.
They were super fun. And for anyone who doesn't know what we're talking about, they were like rubber band bracelets that would snap into different animals or like a dinosaur or something, triceratops, whatever. And those got banned because everyone was screwing around with them instead of doing school. So my guess, because on Crocs, you can add little charms, like little pins onto Crocs and customize them, that people were messing around and then they just banned them. It's my guess, as opposed to like some safety concern.
I mean, I wouldn't doubt it. I remember something that did get banned was what are was it the lanyards with the keychain? That's what you call it, though, right? Like a lanyard.
Yeah, the lanyards that you had your like ID on or something.
Yeah, in middle school, we would put those in our pockets and let the lanyard hang out, and I mean, they banned that. So the rules just keep coming. You never know what you're gonna get.
Just bans, whole lot of bans. And looks like Crocs are on that agenda. And evidently they just had a rough earnings day, which I was a little surprised about because like everyone I know has Crocs. Like I see so many kids like on the train on like public transit in Chicago, and they're all wearing Crocs.
Yeah, and I mean, if you see a lot of sports teams, I know volleyball, basketball, anything athletic, I've noticed a lot of those athletes will start to use Crocs as their like slip-in shoes before a game, or just because they're just easy to slip on and off. So even within that industry, I've really seen them pop off and kind of catch a trend there too. So this is a little surprising.
Also the Hey Dudes brand, which is actually produced by Crocs, and somehow like they're kind of not ugly enough. They're ugly, but like
they're like very bland, right? They look like slippers.
they kind of do look like slippers. Or you know what they kind of look like? They kind of look like, here, let me pull this up real quick. These shoes. They kind of look
That-
like Toms, right? Or like almost like moccasins, maybe?
Yeah, I would say moccasins.
Kind of like
Throwback.
moccasins. And I remember
totally
moccasins
forgot
were like
about those shoes.
really big and like I mean, maybe always actually, but I knew a bunch of people that had moccasins.
Wow, you just brought back a memory. I forgot I had the moccasins. Wow.
They're kind of
Yeah.
like not ugly enough. Crocs are like a dystopian level of ugly, which is kind of why they work. I think people started wearing them, I like ironically, is my guess. Like it just seems like a very ironic shoe to wear, and then
That's
and
like the
then-
same. That's like the same vibe of Hawk Tua. It's like this is so ridiculous that it just keeps popping off more because of how ridiculous it seems, and it almost is like a self-fulfilling prophecy.
Oh, the things people will do for the meme. But that being said, yeah, we had Crocs, we had JetBlue sold off by 17%. Man, airlines
Hey, dude,
these
seemed
days.
like it should have been worn. Should have been something Ashton Kutcher invested in. That's funny.
It does kind of seem like that, like a very like Hollywood shoe. Or what's the name of those gym shoes? Allbirds, right?
Allbirds. I don't think I'm familiar.
These are like very big in the tech space. Like every fucking software developer, someone correct me if I'm wrong, but it's everybody I know has one pair of these Allbirds
Oh, yeah, that's a tech starter pack.
for sure.
Definitely.
They look comfy though.
They do look comfy. They look nice and light. Different colorways.
They're not bad, right?
Nah.
No Allbirds stock today though, just a donk in JetBlue. And then some companies that actually just reported. Let's see this real quick. We got AMD. Looks like that was a donk from AMD. I think that's going to be a nice post earnings play, to be honest. I've talked about this before, but I like going back and forth between NVIDIA and AMD because their price correlation is actually pretty low. But I've seen like some volatility inflation between the two assets. So I kind of like go back and forth between those two, depending on where we're at in the different cycles.
Yeah.
Reddit had a stonk. I'm sorry. Pardon me. They just reported earnings, and we're seeing. Oh my god, dude! What the hell? That's
Wow. Shout out Reddit.
Okay, Reddit. I got to dive into this earnings report. I usually wait until like the morning after, or like the morning after the report, just to kind of like give the market a little time to settle. But this is going to be really interesting to read. I'm excited about that one. Looks like Snap had a bit of a stonk. Google had a bit of a stonk, not a bit, a whole bunch of a stonk. It looks like Chipotle had a moderate donk. Verizon had a moderate stonk. A little bit surprised about that one actually. And then First Solar, be donkin'. Yeah, First Solar be donkin', but I don't know. There's still a bit of time before the opens. We're gonna have to see where this winds up.
Yeah, we'll see. Because I mean, we'll use McDonald's for example. You never know what you're gonna get.
It could be E. coli.
You don't know.
You don't know until you try. Well, that's our little tour to market. Do you want to hop into some trivia?
Yeah, no. Let's get into it. We got a couple back in the gaming industry for today.
Dude, that was a very, very popular topic. Let me go ahead and switch this over. There we go. Can you see that?
Looks perfect to me.
Hell yeah, dude. Dude, I love this switcher. This switcher is so much fun. Have I shown you a switch? It's a little, I don't know if you can see it, but I got a little.
Let me see. Oh, I'm still so jealous. Honestly,
What?
I'm still so jealous, Julie. I'm not gonna lie.
I got my
how's your
little
experience been
J-Pow.
so
I got my
far?
little Tasty. I love this thing. You can switch between the different scenes. I'm in love with it. But anywho, we got to get into trivia. We got some gaming to talk about.
Last
Very
question,
popular
Julia.
topic.
I
Yes,
know you have a PC. Is your PC case black or white?
that's interesting. My personal PC case is black with like a tasteful amount of RGB.
Okay, does it have a little bit of is it a little transparent on certain areas or no?
One side is glass.
Okay, that's sick. I was just wondering if you had a white one and then why you wouldn't get the white. I forget what the Stream Deck, but I see your whole setup matches. That's pretty dope.
I liked the purple one because I'm into like the transparent.
I didn't even know there's a purple one. Wow.
There's a purple one.
Hmm.
There's a purple one. And one day when I don't have the virtual background, I'll show y'all because, hey, man, Pyre, it's awesome to see you. Thank you for joining us. You probably didn't get a good look at that, but I'm in love with it. I did that for me. Any hoops. I want to make sure we got enough time for our trivia questions. So first things first, we do have an app. We just made some sick updates. We got a heat map in there on the trade page. We got a stock screen in there. That's looking pretty cool. And we got some cool updates to come. So if you want to come find it, it's in the App Store and the Google Play Store. And then as well, if you want to come throw your trivia answers into chat, you can find us on Tasty Live's YouTube channel at Tasty Live Show. If you want to follow us on X, formerly known as Twitter, our handle is at Bad Trader App. It's a good time. So video games.
Come hang out with us. Yeah, come hang out with us. Video games on the day. Chat. Throw in your answers. Don't be shy. Google is not allowed, so close those browsers. But let's jump into the first one, Julia.
Let's do it. Okay.
Cool. Which gaming company known for its acquisition of studios like Bethesda, I don't know if anybody's played that, made headlines with a 68.7 billion bid to buy Activision Blizzard, a move set to shake up the gaming industry. Which gaming company was this? And I will say, to not throw the viewers off a little bit, this company, yes, they're in the gaming, but they're in so many different departments as well. Very popular household name, one of the big ones, but they do many other things than just video games. But that is one of the main ones.
Yeah. Okay. Because I definitely remember Bethesda's acquisition. Because Bethesda's made some obviously pretty iconic video games. Zombies, this is from Luis over in YouTube chat. Zombies on the new COD is cool. Have you played the new COD yet?
I did. It's really fun. There's like a lot of different types of Easter eggs, things that you can do. Feels kind of like brain rot if you don't do that. Because it's like you could just go round after round. It's just like, okay, this is brain rot at some point. But there's like little Easter eggs that I guess you could do. I haven't done them, but I've heard. But anyways.
Do you have a favorite Zombies iteration?
I don't think I do. I've never been a big fan of. Are you saying which Zombies game was the funnest?
Which one you enjoyed the most? Yeah.
I really don't. I would say I've only played this one a couple times, but I'm gonna have to go with this one or Call of Duty 4. That one was like way back in the day. That was like maybe elementary school times. But I've always been more of a fan of multiplayer. I've always kind of been a multiplayer guy, very competitive and playing online with other people. So that's been fun.
Black Ops 4, man. Oh man, there's been so many iterations. I can't believe we're on Black Ops 6.
Yeah. I think this one was called Call of Duty 4. This one was like before Modern Warfare 2, which was released when I was in like 5th grade. So I think this one was maybe back in 2005, maybe.
Damn, dude. I'm looking up like some of the monsters and some of the gameplay. Man, this is wild. That's gotta be, we gotta do like a Call of Duty or just maybe like a video game tier list. I think that'd be really fun.
I have too.
But I'm gonna go ahead. Everybody go ahead, take a second to give your answers over in chat. I do actually know this one. I didn't know, did they buy Activision Blizzard or did they just bid to buy it? I think I'm not sure. But that being said, I happen to know this one because they also acquired Minecraft. Is it Microsoft?
It is Microsoft. I did not know Microsoft acquired Minecraft.
Yeah,
do you know what that price tag was?
Oh man, how much here? Let's find out. Maybe that could be how much did pay for Minecraft? Oh my God! Do you want to take a guess?
I'm gonna go. Is it in the? All right, I'm gonna go. Okay, higher or lower 500 mil. I'm gonna go. How many bees?
There's 2.5 bees. They paid.
What?
They paid Mojang $2.5 billion in 2014 for Minecraft.
Oh, okay. I was about to say 2014. That makes sense. I think 2014. I was playing Minecraft heavy. 2011, 2012, 2013, 2014, and then kind of fell off from there for me.
Which I'm just glad that they still that Java still exists because there's some stuff that you can do in Java that you can't do in Bedrock and whatever. Nerd talk. We could get into it a whole lot more, but you know what? Let's go to the second question. Oh no.
Cool. This one is maybe stump people a little bit, but which video game company known for creating Fortnite isn't publicly traded itself, but significantly boosted the stock of a publicly traded Chinese company that owns a stake in it? We have talked about this. It's not a super popular underlying, but we have most definitely spoke about this underlying before.
Oh man. Okay. I don't play Fortnite. I know the dance.
I know the dance.
I know the dance sometimes. But you said it was a Chinese company, and I know one company in particular that does everything. It's actually a ginormous company, and they have stakes in a bunch. Like they actually have a pretty big name in the gaming space, even though they run WeChat, which does like everything. It does like messaging, streaming, payment processing. Actually saw a really interesting YouTube video about this company, and I think I can guess what it is, but I'm actually not very confident.
Okay, what does it rhyme with?
Tencent?
No, I wouldn't choose that answer.
Oh, should I not? I guess it could be. Oh man, what else would it be? Dude, they have stakes in everything.
No, go with your gut, Julia. Go with your gut.
I don't know, chat. What do we think? I should know who makes Fortnite. Oh no, or at least who created Fortnite. Shoot.
Go with your gut, Julia.
I'm gonna have to give my best guess because we are just about out of time, and my understanding is this company has holding like stakes in like everything. I think including Reddit as well. I'm gonna say is it Tencent?
It is Tencent.
Is it actually Tencent?
Yeah, it's absolutely is Tencent.
Dude, Tencent is a gigantic company.
Yeah, I guess I should have clarified my words a little bit. I guess not as relevant to me because I don't trade Tencent, and I should have said, you know, we've talked about it before, but it's not one I talk about all the time. But yeah, you're 100% correct. It is Tencent.
Dude, I just so happened to know about this company because I saw actually a really interesting like YouTube dive, like an hour and a half YouTube dive about Tencent. But they do, oh yeah, here. Okay, so here I'm looking at the Wikipedia right now. They acquired Riot, or no, they acquired a majority in Riot Games, which developed League of Legends. So they have a stake in Riot, right, with League of Legends. They also did, I believe, minority stake in Epic Games. So Fortnite, Unreal, Gears of War, Infinity Blade, Jesus Christ. Took a part in Activision Blizzard's, but dude, they're actually, you know, for a company that kind of has like their tendrils, I guess, and everything, actually have a pretty significant stake in the gaming industry as well. So that was my best guess, but yeah, turned out to, I think we're 2 for 2 for today.
Yep, 2 for 2. Love it.
2 for 2 is another OTC only trading company. But I think you can get some exposure to Tencent because, like I said, they do have stakes in a bunch of other companies, including like US based companies. And I believe some Chinese companies that are available in the US as well. But that's going to have to be another trivia session, I guess. I think we're just about out of time.
Yeah, it's almost a whole other thing we could dive in and pull a lot of trivia questions from. But no, that's it from me, Julia.
That might be actually like a good trivia category for Thursday, which is like, what does Tencent not have stakes in?
Writing that down right now as we speak.
That could be a fun one, right?
Yeah.
WeChat does. I know that like Elon Musk was talking about like, oh, X is going to be like the everything app. Like WeChat is actually the everything app. Like they do everything. It's a wild app. But yeah, maybe that'll be for Thursday. But E, is there anything you want to leave before we 1-2 skadoosh out of here?
No, that'll be all. Thanks for taking the time to hang out with us. But that's it from me, Julia.
Hell yeah. Well, thank you guys, everybody, for participating in trivia. Thank you guys, everybody, for hanging out in chat. It was awesome to see everybody here. We're going to catch you guys on Thursday. So be careful out there. Good luck trading. Good luck with earnings. Peace.
It's option jive. Tomas, we're back, my friend. You know what that means. Time for a little more Tasty Live with this option jive. Go. Even the S&P is down 11. Nasdaq down 5. Go. Russell leading us lower by 13.
Yeah, the Russell's not liking this bond move.
Ooh,
Tom's not liking
116.30. I noticed you stopped with the dings at 31.
Yeah, there's no more.
Still have low D over there, by the way.
No more bond buying.
You need like a hymns or something like that.
Yeah, I'm done. But you know, it's kind of sad. They were supposed to stop at 22.
Is that what it was? Is that what it was?
Supposed to.
Uh-huh.
I could accept 20.
That's five grand ago they were supposed to stop?
Yeah.
Got it. It's 1,000 a point, right?
Yeah. They were supposed to stop at 20. Well, let's say 20. They got down. Now they're 16.30. So now I don't understand. Now you got a situation where
we got ourselves a situation. Look at the Ivy rank 296. Oof.
Now you got a situation where
I might have to help you with bonds and do a bond trade on my podcast every Tuesday and Thursday, starting off. That's right, my friend.
No, now you got a situation where you got to raise rates.
Yeah, the new Victor said it. The new cut is a rate hike. That's correct.
That's it.
That's right.
The new rate cut is a rate hike.
That's right. That's right.
I mean, this is going to throw they went from having seven rate cuts to having the next one being a rate hike.
Mm-hmm.
I don't know what they're going to do. Jay Powell is going to be
have a little egg on his face. Nah, he'll spin it.
I don't think they're going to have any egg on their face. I think he's confused. Has there ever been a time
watching your old archive? You said you had 25,000 pizzas with Scott Sheridan yesterday or the day before, remember?
What do you mean 25,000 pizzas?
You've had 25,000 pizzas in your life. They say you don't know how to order a pizza. I've had 25,000 pizzas in my life. Yeah. Another fact check, you'd have to eat one a day.
I do. One pizza a day.
One different pizza a day for life.
25,000 pieces of pizza?
That's right, 365 days in a year. Yeah, I mean, it fact checks. It's pretty close.
Which one of your idiots would do that?
That's funny.
Just fact checking you, Sadnov. Got a lot of discrepancies this morning.
How many pizzas do you think you've eaten in your life? Pieces of pizza. How many times in your life? You're 74 years old. How many pieces?
I look good.
How many times have you think that you've had pizza in your life? It's probably.
I mean, it is the food I can eat anytime.
I know. I would say you're easily into the thousands.
Yeah. In high school, I would have it almost every day for lunch. If they let us out of the institution, I was there. I mean, that was it.
I mean, you're easily into the thousands.
Sicilian pizza back then too.
Sure.
Yeah. Why not?
But I mean, you're easily into the thousands. I mean, are you at 10,000 times?
I don't know. That's a lot. Close, probably. I'm there. I mean, yeah. I don't know. I'm not 25,000 like you, but I'm up there.
Okay, you're 70 years times.
It's not 70 years. You weren't eating it as a baby. I mean, come on, you. How do you? Don't make me say the word we're not allowed to say.
Okay, let's be more fair. 50 years.
50. Got it.
50 years.
Yeah, once a day for 50 years. 36.
Now, let's just say
I'm in the 5,000 range.
Once a week.
Once a week, only 52 weeks. Yeah, no, once a week would even be like, what are we doing? Come on, let's go.
Once a week for 50 years takes you to 2,500. You're at least 2 to 3 times a week. So you're in the 7,500 range. Okay, so my 25,000 is not that far off.
No, it's only again 400% off. No, you're close.
Yeah, so Tony's in the. Yeah.
Mm-hmm.
That's.
I'm glad how you switched it to me. By the way, I like how you did that.
Yeah, and that's only using 50 years of your life. You've probably been eating pizza since you were. Your mom probably started giving you pizza when you were what?
How much of my mom?
6 months. So I got to add another.
At least.
I got to add another 15 years. Yeah, you're probably close to 10,000.
Babysit the grandkid the other day. We gave him food he's not allowed to have.
What'd you give him?
Like all kinds of stuff that his mom doesn't let him have, like all the good stuff that you give kids, the crackers that they get.
You get in trouble?
You didn't tell her.
Oh.
No, she doesn't know, won't hurt her.
She's tough.
She's tough.
She's tough.
Yeah.
I was talking to her the other day. She's kind of like, she's.
Yeah. She's sick of your stuff. Yeah.
She's tough.
That's right.
Yeah.
That's right.
Yeah. She was talking to my daughter, and the two of them, they're both tough.
Oof.
Yeah, they're not.
Strong women.
And my daughter was over this weekend barking orders at me. Oh my God. I'm like, gotta lighten up, girl.
Yeah, I'm sure that's exactly what you told her. You sat there and giggled like a little schoolgirl that you are. Let's go. Option jive. Probability of profit. Maybe deceiving.
I like when she gets all puffy chested, gets all uppity.
Holier than thou. Yeah. Mm-hmm.
Probability of profit may be deceiving. Let's take a look and see where the boys are going with this one today. POP. Probability of profit is POP. It is a metric that we often prioritize, but you know what's weird about POP is that sometimes we go a little overboard with POP. Return on capital, which is ROC, may be more important as it directly reflects potential profits and losses, especially when considering management and portfolio volatility. Unfortunately, it is not possible to get high values for both metrics simultaneously due to their inverse correlation. Didn't know that, did you? That pop and rock are inversely correlated. You have a high probability of profit, you're going to make less money. You sell a 5 delta option, right? You're not going to make as much money as if you sell a 50 delta option.
Sure.
And therefore, those two are inversely correlated. Let's go next slide. The most straightforward way to boost your pop is to use further out of the money options with smaller deltas. However, this also means sacrificing your return on capital. Finding a balance between these two is really critical. And we talk about this all the time. Where is the balance? Like, you know, what is the delta? What is the delta? Where are you going to be balanced? I like that 22 delta, the 550 strike up here, and maybe the 27, but that's about as rich as I get. I like the higher pop. I don't care about the smaller return on capital. I like the higher pop, and I like that kind of mid-20s, low 20s delta. We're not selling 66 delta options, that's for sure. Mm-hmm. Let's go next slide. So pop is a range based on where the short strikes are placed. The range for the true probability of profit is a trade bound by the following formula. So we put this up here. We have the highest possible pop and the lowest possible pop. And again, this is like, you know, we've never really talked about this before, but you know, the highest possible pop is 100 minus the delta of the short strike. It's also the true pop of a naked triangle. We've kind of broken that down before, but it's fun to see it in this light. Let's go next slide. So here you get a better visual of it. Because the higher deltas often come with more volatility, iron condors that have 30 or 40 delta short strikes have a very wide range of true probability of profit, depending on where you place the short strike. Iron condors with 10 or 20 delta short strikes have a much narrower pop range. And we showed you kind of this on the graph here. It's just fun to look at. So you see the max pop and the min pop. That's just, you know, that's just based on where we place the strikes. Mm-hmm. So let's go next slide. So we trade a typical tasty trade style short premium trade. We tend to have a pop between 70 and 90% depending on the strategy and delta we select. Although it's easy to interpret what pop is on a trade by trade basis, when it comes to multiple independent trades, it is easy to misrepresent what the pop actually tells us, specifically regarding streaks of wins and losses. So if you do a 70 delta pop, a 70 delta pop, a 70 delta pop, so you're 70, 70, 70. Mm-hmm. Are you still 70?
70, 70, 70.
You do 70 delta pop trade, 70 delta pop trade, 70 delta pop trade. What is the probability of profit on your portfolio? Is it 70, or is it greater than 70, or is it less than 70?
Would it matter if it was both sides of, would it matter what strategy it has? Because if it was all, like, just say, for argument's sake, naked puts, I would say that your delta.
No, it doesn't matter.
You don't think so? I would say that your pop is 70%. It's probably going to be lower.
Probably going to be lower. Let's go to the next slide. So this table compares the probability of profit, but also the probability of having winning streaks based on your initial pop. So you can see here, when random independent trades, the probability of any 2 wins, 3 wins, and 4 wins. So in other words, your probability of profit is 70%, but that's on any given, win. But then if you have to do 2 or 3 or 4, you can see how dramatically these things change. That's why we mix in. That's why you get paid more than what your pop is, and that's why you mix in lots of different trades, okay? Because you're not going to necessarily get a streak where everything works your way. Yep. But this is interesting to see because you can, the chance of different streaks change your actual portfolio probability of profit. You think you're 90%, but you might only be 73. Let's go next slide. Note that although each hypothetical trades, the initial pops are all high from 70 to 90, the change in probability streak of 3 or 4 winners in a row is starkly lower if the initial pop was slightly lower. And you can see how much the 70% drop off compared to the 90%. That's all they wanted to show here. So when you start going for the bigger trades and you put more of them on, the total probably profit drops down. Let's go next slide. Just giving realistic expectations. So the purpose here is to show that the probability of seeing multiple consecutive wins is usually much lower than people expect for the trade, even though it has a high pop. The lower the initial pop, the starker the drop in probability of seeing consecutive streaks. And that's just to give realistic expectations. Let's go to the next slide. So in order to increase your probability of profit, traders may considering increasing the risk on one or both sides. However, this leads to a decrease in a potential max return on capital. Again, suggesting that don't focus so much on max return on capital, focus on your pops. And you want to tweak those risks a little bit. Higher the pop of your trade, the higher the probability of seeing a streak of winners using the same trade. And a pop that may seem high on its own may actually have a very low probability of seeing a streak of wins. Not this specific win, but a streak of wins.
Good job, team. A lot of information in there that we probably
A little heavy.
Yeah, probably went over pretty quickly. Could have done a better job at that, because some of those pops going through those streaks. It's got to define what the market's doing too, right? I mean, so
there's a lot to it. All they're doing is just using random, random numbers. But it just all they're saying is if you do 70, 70, 70, the
because
chance.
a 70 pop trade might start out as 70. A week later, it could be an 85 pop, right? I mean,
Yeah, but what they're really saying is that the chances of all three being winners is a lot lower than you think.
the 70% pop. Yep, got it. Let's take a quick 90-second break and come back. We got more Tasty Live after this with the moment you've been waiting for, the opening bell. We'll be back in 90 seconds. Tomas, we're back, my friend. You know what's happening? Enough out of you. We've got this man, Gad, in the house.
We do. Hey, Gad, how are you?
I'm good. How are you?
Gad's one of our researchers, and this is a piece that he wrote. And so I thought it'd be easier, since we're talking about stress testing with back testing, that just you're here in case Tony has some problems with what you wrote.
Sure, I'm right here. Yeah.
It's a little hard.
Definitely.
Yeah. Tony has a little, occasionally, it's.
I need you to clear things up for me.
Yeah, we need to clear things up.
Good.
Let's do it.
Yeah.
Yeah.
So, how's everything going, Gad, by the way?
Everything is good.
Everything's good?
I'm healthy. I'm good. I'm happy to be here. So.
You're healthy, you're good, and you're happy.
Always.
Sounds enough. You should have a little bit more of that attitude, okay? If you brought that attitude into this studio, we'd have a better day.
He has a good attitude.
He does have.
You should take a lesson. Gad, you should be giving lessons in work attitude, work ethics, work attitude, that kind of stuff. Yeah.
I think he has.
I thank you. Thank you very much. I thank you very much.
We're going to do our first live segment ever from Africa over Christmas, just so you know that. You're ready, right? We're going to do it.
I'm ready.
Yeah.
That would be great. Because you're going home to visit mom and dad, right?
On Christmas, I'll be go home.
Good for you.
Yeah. When was the last time you went back to Rwanda?
It's 4 years.
4 years.
3 to 4 years. Yeah.
3 or 4 years.
Yeah.
Okay. Yeah, I want to do a live show from Africa. Have a little fun.
Okay.
Yeah.
Good.
They're going to be grossly disappointed.
There's no disappointment.
There's no disappointment.
It'll be great. But the Rwanda, if you go in Google and write Rwanda, my home country, it's one of the cleanest country in Africa.
Really?
Oh, is it really?
Yeah, if you type like Rwanda.
So I did look it up. It actually is on the coast and extends almost to the middle of the continent.
Yeah, it's a Middle East Africa.
But you have a coast too. You have a big. Rwanda does not have a big.
It's a landlocked country.
It is landlocked. Oh, I thought I looked it up and said I.
How is the pizza in Rwanda?
So pizza, actually,